All right. Good morning. Good morning. All right, let's get ready. We got 2 minutes to go. 2 minutes to go. Okay, we got about 40 seconds to go. 40 seconds to go. All right. I'll be looking to buy some SPXL if the markets do follow through this week. And some call flies centered around a move towards 6,800. We're about to open here. And we're open.
Extreme high took alert.
Core weave higher.
High took alert plus 800.
Palantir, watching Palantir, core weave. NASDAQ 100, Intel's number one. Intel and Micron looking for number one. Mic check, mic check.
Extreme high took alert. Extreme high took alert.
All right. Top stocks, Intel, looking pretty good there, Intel. Let's see how we're doing with Intel.
Extreme high took alert.
Intel looking good. SPY, S&P still rising. Intel. All right. Give the markets a few minutes to settle down. Looking good.
Extreme high took alert.
Fly. Okay. Fly, that was running last week, gapped up. Looks like it's going to go. Fly, looks like it's going to follow through. Aerospace. Intel looking good. Here goes Oracle. Oracle on the move. Oracle. NVTS is up. S&P is trying to take out the London session high.
High took alert plus 800.
Okay, this looks good. The market's popping. Intel number one on the NASDAQ 100 and the S&P.
High took alert plus 800.
All right, looking good. All right, you have longs on from last week. We're looking good. We are looking to go long call flies, targeting the 6,800 level. Once the market's settled down a little bit, we'll look at those.
High took alert plus 800.
Just letting the market settle down. We do have high ticks, and the future is pushing up against the morning highs. Okay, S&P is pushing higher. S&P breaking out. Okay, we're taking out the London session high. Intel's higher. Looking to take a butterfly, 6750, 6800, 6850, 6750, 6800, centered around 6800, 6750, 6800, 6850, 50 wide, 50 wide on the fly. I'll post that in a minute. That's what I'm looking to do. Those are going for about $3. Okay, we're pushing a bit higher. Okay, Intel's still number one on the NASDAQ 100 and the S&P 500. No, it slipped to number two. Number three, SNDK from the watch list. SNDK from the watch list is number two. Strategy, we got Bitcoin moving higher. Bitcoin, of course, many of you were following Bitcoin over the weekend. Came in talking about
Tickler plus 800.
Came in talking about Bitcoin. Mondo talking about Bitcoin. So you're aware of it. Futures pushing higher. S&P 500. Just waiting for the markets to settle down. It's only 9:45 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, March the 16th. S&P at the high. Let's see what hedge flows look like. Okay, they're buying calls and selling puts. That's creating positive gamma.
Tickler plus 800.
S&P, okay, looking good. All right, pretty decent day so far. Let the market settle down. We have a lot of chasing going on. Market's pulling back a bit. Just taking some profits off the table. Intel, S&P. Okay, Bitcoin looking really good. Okay, if Bitcoin makes it through this area, this is the resistance zone that we ran into on, what was it, Tuesday? Wednesday, we hit this level. Bitcoin, watch Bitcoin. Okay, let's look at junk bonds. See how junk bonds are faring. Are they buying junk bonds? They probably are. Yeah, they're buying junk bonds. Junk bonds, let's see. Breadth indicators all turned up. Okay, these are all turning up. Breadth. Junk is up. Junk is up. Okay. Looking good. Let's go take a look at S&P equal weight. We should have a signal here. Number of stocks for the 20-day. Okay, nice turn. Nice turn. All right. Market's looking better. Little consolidation at the moment. Just marking up a couple of charts. Going to post that as well. Looking good. All right, so we're almost at 10 o'clock. Almost at 10 o'clock. We're looking for a trend, not a fade, but a trend. I guess we could see a trend, a fade, but looking for a follow through. We're bouncing at a previous breakout zone. We're bouncing at this previous breakout zone. Let me just delineate that. We're right at this previous breakout zone. Looking for this to turn up as well. Okay. So far, so good. Don't need to jump in feet first. S&P looks like it wants to keep going. Bitcoin looking good. Intel Intel off the highs of the session. Let's just see what the New York Fangs look like. All right, Microsoft pulling back, Apple going. Nvidia is up. Netflix bouncing. Tesla on the move. Tesla looking good.
High tick alert plus 800.
High tick alert. S&P. Tesla looks good. Tesla. S&P is breaking higher. Futures 67.73. For those of you playing the NQ, the NASDAQ futures from last night with Cayman. Nice job there, Cayman. United Airlines, a lot of these stocks moving higher. What is with crude oil backing off? Crude oil, United Airlines starting to see a bounce. UAL. Nice bounce off the low. United. Bitcoin, looking for that to follow through. A little off the high of the day now. Bitcoin. NIO, a couple of you were looking at NIO last week. NIO gapping up. Okay, futures pulling back in a little bit. Walmart from the watch list. Walmart looking for a follow through. Squeezing. Bollinger Band squeezing. Let's see what's actually working today. Intel is up. Nvidia is up. Dow Jones. Boeing. Second day off the low. Boeing. Okay, Boeing, Goldman Sachs, the banks looking for those to bounce, looking for Caterpillar to bounce, regain some of this lost ground. We got about 70 points overhead, potentially 70, 75 points overhead on Caterpillar. IBM higher low. IBM higher low. IBM looks good for a follow through. 240, 245, low of the day. Underneath the low of the day, 245 looks like a good place for a stop. Our S&P continues to push higher. IBM looks good. Put a stop underneath the low of the day, 245. Looks like it's going to continue. Got about 10 points. Let's see. MSTX. Yeah, coming out of a Bollinger Bands. Mhm. Okay, Micron still number one. Micron number one on the NASDAQ. SNDK number one on the S&P 500. SNDK, that's on the watch list. Micron's number three on the S&P. Intel is number three. Number two is MicroStrategy. Intel, upper Bollinger Band. Tesla still going. Tesla still rising, looking good. Oracle looking good. Inside day for now. All right, Tesla's still pushing. Tesla got April 410 calls. April 410 calls also had April 420, 425 call spreads. 410s and 425, 420, 425 call spreads. Tesla looking good. Bitcoin looks like it wants to go. Bitcoin, watch Bitcoin here. BITX, BTC, USD. Okay, we're above that 7,400 resistance zone. Okay. Strategy taking over number one on the NASDAQ 100 strategy.
High took alert plus
All right,
800.
futures are going here. Futures are on the move. Looking good. Bitcoin, S&P 500. All right, pulling away from VWAP. S&P pulling away from VWAP. Where is my note? Here it is. Okay, looking good so far. Okay, we got a lot of resistance overhead, as you can see, 0-day. A lot of resistance overhead. This is non-zero day. Above 67.25, we've got a lot of resistance. A lot of traders selling premium overhead. That's resistance, looking for hedge flows to turn up. All right, back to Tesla. Tesla's still going. All right, futures are still having difficulty getting through this area. We got resistance overhead. You can see very clearly lots of resistance overhead. Okay, watching that resistance overhead.
Well, I think the company knows it has to make needle-moving announcements at this conference because they, pulled up some of their announcements probably earlier in the year at the Consumer Electronics Expo. So I think the company knows that. I'm sure everybody there looks at their stock price every day and says, how can we get this thing going up again, right? So I think that the company has made as much hay as it can in the training area, and it has to move further out from there. And robots for sure are going to be on that stage. And I also think that
All right, just watching resistance at the moment. Tesla, Tesla's still pushing. Strategy still the high of the day. Global Foundries number 2 now. Micron number 3. Intel number 4. Future still struggling with this level. Okay, Tesla's still pushing. Tesla's still pushing. Top stocks on the NASDAQ 100. Strategy, Global Foundries, GFS, Micron number 3, Intel number 4, and Mondelez number 5. That's the NASDAQ 100. S&P 500, we've got SNDK, SanDisk, we've got Seagate Technologies number 2, Dollar Tree number 4, Norwegian Cruise Lines number 5, and Micron.
website search being gobbled up by these large language models. People don't really want to get a list of websites back. They just want to ask a question in English and get an answer. So that is a huge driver for the top companies that have the cash flow and that they really decided to keep spending. But it's going to end at some point because you've got to get that money back. And I don't necessarily see a way towards that.
That's really interesting, Paul. I mean, I know that you're investing on the infrastructure side, right? We have companies like this, on CoreWeave, for example. And again, that's still the build, right? And so, to Ken's question, like, when do we get that return on investment? When does that start to happen in a more material way?
What I think happens, and so I'm short-term neutral to bearish. I don't think we're going to be locked, get out of this lock trading range. The AI infrastructure companies like NVIDIA and some of the others, I think in 2027, we'll have a nice inflection in these businesses. We'll get some sense, or even more of a sense, that there'll be monetization. But I think 26 will be continued infrastructure building. So I obviously are going to be with my NeoCloud semiconductor hardware companies. But I think we're going to get some goodies in 27 that'll change the narrative. But unfortunately, we're not going to be able to see that until we get pretty close to the end of this year.
Yeah, we gotta wait, I guess, to see what happens with that. Before I let you go, Kim, I want to ask you about Micron also, because obviously there has been this new narrative of a shortage of memory chips. Micron's been a beneficiary of that, having the pricing and the high bandwidth memory. They report this week. Maybe Micron is in a similar situation where, like, the stock's going up. It's going to be hard for them to beat that. What do you think?
I do. I know, all of these people are tied together in the success of AI. I mean, that is the fundamental thing. In preparing for this appearance, I looked at some articles, and Jason Wong thinks companies are going to continually spend in the trillions, beginning in 19, or, over
Tesla still pushing.
continuing to build out. And I think that's probably not viable, right? And somebody has to be paying trillions to access it. So if it's money in, money out,
S&P 500
who's going to win?
being led by SanDisk. SNDK on the watch list, trying to get through 750, 720, 750. Sienna trying to break out. STX trying to break out. Dollar Tree coming off the low. Norwegian Cruise Lines. The cruise lines were off last couple of weeks. Let's see what Royal Caribbean looks like. Royal Caribbean and Carnival. Okay, looks good. CoreWeave pulling back from the high of the day. CoreWeave futures still struggling to get through this area. We know why. There's a lot of resistance overhead. The 6730s were taken off. You can see those are gone now. 6735 is getting threatened, maybe. 6720 resistance for now. Then 6735 and 6750. Hedge flow still dropping off. Looking for a turn higher. It is almost 10:30 here on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday, March 16th. We're looking for markets to test these overhead levels. We have done that. Now that is resistance. Hedge flows continue to drop off. Hedge flows still dropping off.
So it's basically building infrastructure that allows NVIDIA, which is more picks and shovels, to be able to fill out these data factories, these data centers. And so this deal, and we talked about it last week because Meta took the, or excuse me, NVIDIA took this big stake in Nebius and this got popped on the announcement. Well, now we got more details. So let's see. There we go. So this deal is worth $12 billion by 2027. $2 billion in additional purchases over 5 years. So this could be $27 billion total. This expands this earlier relationship that we were talking about with NVIDIA. So that $2 billion investment.
Tesla just off the highs of the session. Oracle, no follow through yet. Bitcoin pulling back from the highs. The cruise lines look good. Cruise lines look good.
Here's the 1-year chart, and you can see right up to resistance where we were.
Okay, NIO, let's see. United Airlines, let's see what the airlines are doing with crude oil a little bit lower. UAL, AAL, JetBlue, ALK, SAVE. Oh, that's right. They're off LUV. Okay, airlines look okay. They're bouncing. Tesla just off the highs of the session. Hedge flow still dropping off rather dramatically. S&P, looking for a higher low. Back to VWAP. S&P looks like it wants to keep going lower. ExxonMobil taking out Friday's high. ExxonMobil on the watch list.
We will see. I was just looking at RBC saying it's raising its estimate significantly on continuing pricing strength. Yeah. And then let's talk about Dollar Tree. That company issued a somewhat cautious annual sales forecast. The share is actually moving up.
ExxonMobil initially dipped, now it's ripping. Okay, so lots of resistance overhead. Okay, starting to see a little hook in hedge flows. Okay, we still have nice up volume leading. We're off the best levels of the session. Breadth looking better. We're 11 to 1 up volume, 14 to 1 on the Qs. Okay, breadth looking okay. Let's see. Let's go take a look at, let's see what this is doing here. Semiconductors up 2.2%. Tech is up, getting bought off the lows. This is a complete opposite of what we saw last week. Okay, so buyers showing up. Looks good. Okay, ExxonMobil still pushing. ExxonMobil still pushing higher. All right, headed for the highs. ExxonMobil. Let's see, Exxon. SanDisk that showed up on the Bollinger Band squeeze scan. SanDisk. Okay, this is looking good. Looking for the breakout. Micron looking for the breakout there as well. Micron. Bollinger Band squeezing. Breath still looking very good. Breath still very strong. Blue Apron is still in business. Oh, interesting. All right, S&P futures continue to go.
It's always great to see you. So Disney has a new CEO, Josh tomorrow. Maybe just start there, Jason. What do you make?
Hedge flow, still no turn. Looks like we could come all the way down to 66.70.
Well, we did. Disney, as you know, years ago, has had a more difficult than you might imagine succession planning. And so I think having someone come inside the company that is a big surprise is a big plus. I would say the vast majority of investors were a little bit fearful of co-CEOs that we've seen in some of the other companies. Wall Street generally doesn't like that, so they dodged that bullet. And then among the two leading candidates towards the end of the race, Dana Walden was generally not preferred. So I would say that's just a good outcome for this reason. Tomorrow, he's an operator. He's not a creative shop. What do you think of that?
All right, hedge flows are trying to turn here. Hedge flows. S&P trying to turn. MACD has crossed.
What Jason do you think his priority should be? Well, one thing that I would say that I know
Okay, we could see a move above and below, just a range bound action. A doji move back up towards the middle of the range. Breadth is pretty good. Micron still number one on the NASDAQ 100. SNDK number one on the S&P 500. Okay, looks like it could be a bear flag. Be careful. ExxonMobil's still going. ExxonMobil.
And when you told him to drive home, Jason, what was the driver's response? How did he react? Well, he just raised his eyebrows. I mean, remember Mr. Iger, the one I think him a great CEO is he went out and bought Marvel and Pixar and Lucas and very carefully made iconic movies that then pointed themselves into the product, right? And so it was the classic business flywheel. So what I was really asking Mr. Iger to do is take all of the things that go into a great CEO to transform Disney and throw them away. And And so I don't think it ever really resonated with him or sat with him, looking at differentiated content. This isn't how he thinks about Disney, and it's not what made Mr. Iger a great CEO. What I was arguing is,
Global Foundries is now number one. Global Foundries turning back up. GFS, nice bounce. Global Foundries trying to get back above the 50-day.
yeah, I would say it's I would say we'll run into the context. This is a phenomenal period when you took that iconic IP from Marvel, Pixar, and Lucas, and you put new rides in the parks where they were able to both raise pricing and grow.
Global Foundries following through.
Like a powerful VIX or I think a different pricing formula. I think they've got about 3 or 4 more years where they can raise price without having demand destruction. And then from there, I think it's going to be more challenging. I think that's
That's number one on the NASDAQ. Global Foundries, Micron, Intel, SNDK.
Jason, I'm here. You got to buy on this name. The stock, of course, though, it's well in the red. This year is basically flat over the last 12 months. What are the catalysts, Jason, near to intermediate term that you think, that can get investors excited about this name? What's really interesting, I mean, we covered Disney for a long time, and for my entire career, Disney always traded with a premium to the S&P 500. On my numbers, it's 13 times next year's earnings. So what does that tell me? I mean, does Disney really deserve a 13 PE multiple? No. What the street is terrified about is that they're gonna have to lower their guidance this year. That's why the multiple is at 13. And there's two elements to that. One of them is people are terrified of this NFL renewal that they're going through, but that's going to blow a hole in their guidance and cause them to lower it. And the second thing is that you have to painstakingly go through what all the hedge funds do and money managers, your EBIT bridge, and look at it by quarter. And when you do that, you discover that it is naturally a very back-end loaded quarter. So the street was disappointed at fiscal Q1. They were underwhelmed with the guidance. The company's maintaining their full year guidance. They have 2 more quarters to go, and the street just doesn't think they're going to be able to deliver that full year number. I would take the over on that and say they will not lower guidance for the year. I'm just curious. As you know, the name so well. You've covered it for a long time. What would you ultimately make of Iger's tenure? And what grade would Professor VIX give him? Well, I used to joke when Mr. Iger was a young CEO. When he just started out, I was not bullish on Disney, and I would get a huge amount of pushback from portfolio managers, and they would say, "Why do you not want Disney? Disney's so well, I believe in conglomerate." I would say, "No. Disney is ESPN mastering this worldwide conglomerate." Because when we look at the returns on invested capital and everything related to the cable networks division, I'm talking parks, studios, consumer products, they're earning their cost of capital.
Watching hedge flows, looking for a turn. Hedge flows starting to turn.
And
390 stocks advancing. Almost 100 stocks on the NASDAQ.
so I would give him sort of an A plus, I'd call it, in the first part of his tenure, and a B minus in the second part of his tenure. Jason, as always, it's a pleasure to have you on the show. Thank you. Absolutely. Thank you.
Don't waste your day juggling multiple shipping solutions. Go to shipstation.com and make shipping simple with the platform that handles all your needs in one place. With tools for multi-store operations, carrier rate comparisons, inventory tracking, warehouse management, shipping and returns, ShipStation brings everything together in one place. Get on board with ShipStation, the station where shipping gets solved. Start your free trial today at shipstation.com. Oh my God, 600? Dad, let's go! Jackpot, no! I want $800! This is a way to download. If you're lucky, you can win up to $500 in 10 minutes. No ads, no withdrawal limits. All you need is your phone and Wi-Fi. Try it out.
All right, still looking for a turn here in the S&P. Global Foundries pulling back. Micron turning off the lows. Micron gapping up this morning along with SNDK on the watch list. Intel trying. Earlier, we've got a shooting star now pulling back into the range. Intel. S&P still drifting lower. Stocks fading from the highs. We had a nice gap up. A lot of these stocks are fading. Let's see some of these. Marvell fading from the high of the day. ARM Holdings. These are stocks on the top of the NASDAQ 100. Strategy pulling back. DXCM. Dexcom. A lot of chips. People quick to take profits early. LRCX. NVIDIA pulling back. The New York Fangs. Apple. Inside day. Apple. The New York Fang looked a lot worse last week. Let's see what it's doing today. New York Fang. Okay, so maybe a higher low. Got resistance at the 50-day, 21-day overhead. Okay, Intel. A doji would be fine. I'd like to see this close in the upper half of the daily range. Watch your stochastics, your MACD. David? We're not going to immediately reverse what we've given back over the last couple of weeks in one day. It's going to build, so gradually move in. Let's see, JEPI. I'm thinking about buying some JEPI or some JEPQ. And my longer term accounts, SPXL, rejected. All right, Intel trying to bounce, S&P bouncing.
It's not necessarily a concept that everyday investors who are used to investing in equities are familiar with. So I guess first of all, like, what is staking? What do people need to know?
Sure. Well, it relates to the way that blockchains operate. So take Bitcoin, using the proof of work consensus mechanism, it works very well for Bitcoin purchases. There's no role for holders of Bitcoin in that maintenance of the network process. But in Ethereum and any other blockchain, there actually is, and Ethereum uses proof of stake, where actually the holders of Ether have the option to participate in the validation and maintenance of the network. And when we do that, they're a yield as compensation. So that yield fluctuates with based on inflation at the time of 0 to 2% per day. And that creates a yield at the end of it until products in the space.
Is it similar to in the equity world with money out your shares?
It's similar in that both can generate yield at the time of holding, but the actual mechanism
Okay. So how does this work?
So in this case, with BP, which we just launched last week, it's very exciting development for us. It's our third product in the space in the U.S. market, and obviously IBIT and UK has been tremendously successful. So with BP, unlike with UK, there will be staking on the majority of the Ether held by the fund. And so that allows investors in BP to participate in making the holders of the network and turn the yield that they would otherwise get.
And so is the idea that the price of the ETF is along with the underlying price of the asset, and then you also get yield on that?
That's exactly right. Yeah.
Okay, gotcha. Well, and what is the like who's the audience for this? Is it just the typical audience who's buying IBIT and these A, or is it a more sophisticated audience, a more sophisticated audience? How are you guys thinking about that?
So first, with existing Ether investors,
Hedge flows trying to hook upward, shorts covering. Notice all of the 0 day is gone now. People's taking profits.
there certainly are some who have been taking pause or allocating to the space because of the absence of yield. And so the entry of this creates an attractive vehicle for that. And it's almost like the way that I did, or many different types of investors proved to be almost a silver bullet for having a low cost accessible exposure vehicle for Bitcoin. Now we basically have that for Ether the way we did before. That you can get through the ETF all that exposure, including the safety.
All right, S&P, nice rally. All right, nice little reversal for now.
Sarah will play mom for life. I do. Young one. Don't be passive progressive. Get good coverage and savings for yourself.
Oh my goodness. If you want to be like I do, just play this game.
All right, we're trying to push through VWAP.
Global energy prices.
Then, with reports Meta could be laying off 20% of its employees, we are joined by legendary Silicon Valley investor Benchmark Bill Gurley. How he sees AI disrupting the workforce.
And airline CEOs warning of a looming travel crisis as TSA agents now go without pay, asking Congress to restore DHS funding. Look at the latest details.
First up, though, in the markets, we are seeing a nice recovery here.
I bet you if they suspended Congress's pay, they would act a little bit more rational. People that aren't getting paid, TSA. Anyway, S&P looking for some more follow through. We're right at VWAP now.
Treasuries are being bought and oil prices are down. So a little bit of a reversal of what we had seen with the Iran war trade.
Yeah, still unable to get past Friday's high. We're going to watch that. Let's begin with exclusive comments, though, by the Treasury.
Bitcoin turning back up.
Brian Sullivan in Paris covering the latest in this U.S.-China trade talk. Hey, Brian.
Hey, Carl and Sarah. Listen, we talked a lot about trade at the top of that interview. The full thing, by the way, is up on CNBC.com. Go check it out. But I want to talk about what you guys just talked about. That is oil, that is the markets, that is Iran, the Strait of Hormuz, whatever it may be, because
Kava looks like it's going to break out.
is thinking that there will be some kind of end to this, maybe sooner than later. On a positive note, there was a non-Iranian vessel that went through the strait today. It was destined for Pakistan. We know that thanks to our friends at greentraffic.com, because every day, every hour, we're kind of living on that live map to see if there is any more activity. Now, speaking of activity, over the weekend, we saw the White House have targeted military strikes on Iran's Karg Island. Get used to hearing the name Karg Island. It is Iran's main export port, responsible for about 90%, so almost all of Iranian.
Rejected at VWAP for now.
And over the weekend, the U.S. did targeted military strikes on the island, but not hitting the oil infrastructure. And we talked about that a little bit with Treasury Secretary Bessent, who made, I think, an interesting comment about the United States letting Iranian ships go through the strait. Listen.
We are seeing more and more the fuel ships start to go through. The Iranian ships have been getting out already, and we've let that happen to supply the rest of the world. Indian ships go out now, so the Indians who rely very heavily on Gulf oil, we believe some Chinese ships have gone out. So if that
Intel, nice rally off the low. Intel. Nice call, David.
All these interviews is incredibly important to parse through the specifics, saying letting. In other words, we could not let them in some other way. And that's critical for the oil markets because right now we are in deficit. You heard the Treasury Secretary in the last hour ran the comments.
Micron off the highs of the day. Robinhood inside day.
Saw some hit on Iranian oil infrastructure.
Palantir inside day.
Ability, or some of those Iranian ships or ships loaded with Iranian oil could be a very different story for the oil markets, could be a very different story for the stock markets. But as you guys noted, right at the very tippy top, for now, I guess the market is enjoying the fact that oil is not rallying like it did last night.
What is the significance of the attacks on Karg Island, Brian?
Depends on who you ask, Sarah, because there is and I want to be careful here, there is a school of thought. Could the U.S. do some kind of military intervention onto Karg? In other words, potentially boots on the ground, American soldiers, or maybe a coalition with the French, Emmanuel Macron, the president of this country where we are right now, making some supportive comments last night, also on X and other social media platforms. Could there be some kind of U.S. or global military intervention to take the island? If that would be the case, it would take the war up another notch. But some of the comments we saw, Sarah, from Iran, the ship going through today bound for Pakistan, these are small baby steps. But if this continues every day, the price of oil is likely to continue to go down. I know you guys talked about that with Fred Kemp in the previous hour.
Brian, appreciate it. Important comments, really moving the needle, at least on the discussion today. Brian Sullivan in Paris. For more on the impact of the war on both energy.
Dell breaking higher.
Let's bring in City Research
Looks
and
good.
Equity Strategy, Scott Croner. Scott, good to have you. Appreciate the time as always. So trying to
Futures pulling back.
here, again, not able to crack
Dell looking pretty good. Dell breaking higher.
change at all.
Well, I think the playbook has been gradually changing for us, Carl, versus where we were going into this year. We've had a number of these, what's called the tailwinds for now around Iran.
Dell breaking to a new pivot high.
Of the tariff discussion and then, AI disruption. All of it's been kind of laying on top of what had been a pretty good outlook in terms of fundamentals. Now, on the Iranian side, specifically, higher for longer oil prices is not great in that what it really does is put a bit of a wet blanket in terms of the aggregate consumption trend.
Puts getting a bid again. Puts.
The duration of the conflict, Jimmy.
Yeah, pretty much. I mean, if you, the back of the envelope math is that you're looking at, the duration extend, more than a month or two beyond this, you get to a point where the incremental expense that comes in terms of the oil and energy consumption profile pretty much offsets the
NASDAQ 100, Micron, Intel, Global Foundries, Strategy, and Marvell, the top 5. Bitcoin again getting rejected at that 74,000 level. So it seems to be a significant place for Bitcoin. It keeps getting rejected at this 74,000 level. Okay, we're above the 50-day. 74,000. We hit it on Wednesday last week, got rejected. Today we got rejected again. It looks like it's going to squirt through this level pretty soon.
pretty nicely here. Consensus has moved from a 312 start of the year to 316 now. We think our 320 estimate can end up being conservative, but there's lots of provisos here. It remains very predicated on the AI infrastructure build out and related playbook as pertains to semis and circuit grade hardware. But again, what we have an eye on here is the lingering impact. Crude oil prices remain higher for longer. At some point, that begins to weigh on our earnings calculus. But at this point, I think we're
X sector rotation, because the other thing that this has brought out is, this big sell-off in software to start the year and then a mini rebound, and then the private credit concerns and the way that that's had on the financial groups. Do any of those lead you to rethink exposures and recommendations?
Yeah, Sarah. So, I think what we've been suggesting, over the past couple of weeks is that number one, in our view, the U.S. is a relative safe haven versus the rest of the world. Just because of our energy circumstance here domestically. Number two, within the U.S., we do like tech and the AI infrastructure playbook, really predicated on less traditional economic sensitivity, and I think very high conviction and visibility in terms of the earnings profile for
ex-US? Does it bring more money home?
So, Carl, this is what's been so interesting. So if you look at the flow action over the past month, if not 2 months, very, very clear. Money's been surging out of the U.S. to non-U.S.
Crude oil
Okay.
still pushing a bit higher.
Of ETF flows, for example, on equities has been really, really significant. So too has the flow.
Okay, buyers at the low of the day. Crude oil, USO.
Predicated on
This needs to fade.
prior to Iran. So again, this
Intel still climbing. Intel.
in our view sets up for a reversal of some of those flows back our way.
So ultimately, Scott, even if oil prices
FTAI
for a little bit longer than expected, gas prices high,
off the low of the day.
stimulus you were talking about,
FTAI inside day. Looking for that to bounce. Stochastics oversold. MACD, RSI, everything good.
Right? So we're watching the Fed's playbook here, and a lot of times the focus is on, well, will the Fed raise or not? Our perspective here is that since last October, what's been happening is that the degree of ease has been fading. Okay, this has been okay because the underlying economic condition has been pretty good. I keep coming back to this component. If we can get to where we see it in
All right, future's still chopping around here near VWAP.
back down to say the 70s, which is what we modeled for this year, then we're back in all systems go. But if we persist here, 80 above, I think eventually what we begin to see is a bit of an incremental pressure on the consumer that's going to be a little bit harder to navigate if inflation stays a little bit stickier now.
Right. Now, that's one reason we're hoping the forward oil curve, Scott, is reading the situation correctly, at least today. We'll talk soon. Scott Cronin over at Citi. Thanks very much.
legendary Silicon Valley investor Bill Gurley is coming up on the other side of this break. How he sees AI impacting the workforce.
Intel back to VWAP. Intel.
20% of its workers. That's next.
Morgan Stanley Wealth Management
Intel back to VWAP.
detailing the potential ripple effect of the war on the midterms. Oil, of course, a key focus there. Money Movers is back in just a minute.
Intel trying to break out. Bollinger Band starting to open up. Volatility picks up. This could squirt higher like it did back in early January when RSI turned back up. Intel still going. Intel, previous highs over here. 54. Looking for it to break higher.
He's sort of like throwing everything in there. So I don't know that, it's different than saying, China could attack Taiwan and that is a risk. That is different than, right, or whatever that black swan is. That's different than the sort of underlying stress.
Okay, Intel.
And I've talked about this on the show before. I'm not convinced that private credit, for example, is it, right? I was looking at a chart this morning of non-deposit-taking financial institutions. In other words, non-bank like I guess we call it. This is the private credit stuff, the off-balance sheet stuff in some cases where the AXM is. And at the end of last year, it was going above 10% of all loans. Sales contained. Now, maybe I should like do some sort of like evil eye gesture or something when I say that, because people said that, of course, in 2007 also. But you know, it feels, even if it's an opaque corner in the market, it still feels like we have more visibility now. We're talking about it a lot.
Bitcoin back above VWAP. Note the volume on Intel. Got a lot of volume coming in on Intel as we push through VWAP.
Airline CEOs asking Congress to restore DHS funding as TSA agents now go without pay. Phil LeBeau with the story. Phil.
You know, Sarah, when they missed their first paycheck last week, a lot of people said, well, this is when you start to see the problems potentially start to bounce when it comes to TSA checkpoints and TSA agents who make the decision, look, if I'm not getting paid, I'm not going to come into work. And we have seen those kind of reports around the country. It's not hard if you know people in different cities and you ask when they're flying. More than a few people will say, yeah, we had a long line. Maybe it was 45 minutes, maybe it was an hour. Depends on the airport. There have also been, seems like the ones we're showing you here, where there were several-hour waits at certain airports over the last week and a half. That's why the airline CEOs, along with Airlines for America, posted this letter to lawmakers in Washington. They posted it in the Washington Post today. We're not going to read all of the letter. Basically, it says, get these guys back to work. Get these guys the pay they deserve so they can do their job. Fix DHS funding. Too many travelers are having to wait extraordinarily long and painfully slow lines at checkpoints. Wait times of 2, 3, even 4 hours have been reported. This is not the main thing that is hurting the airlines right now. We all know what that is as you take a look at the airline stocks today. Jet fuel prices have been the biggest issue, though the airline stocks are all getting a bit of a bounce back today as we see jet fuel cool off just a little bit, but still, the cost impact on the first quarter and the second quarter, that is going to be noteworthy. And we'll be talking with airline CEOs, and we'll be hearing from them over the next couple of days as they give more specific guidance when it comes to the first quarter and the second quarter, guys. Tomorrow, JP Morgan has its conference in Washington, D.C., and there will be more than a few people listening closely to see what the airline CEOs have to say about jet fuel.
Yeah, I was going to say.
Intel just watching. Hedge flows still haven't turned up markedly. ExxonMobil at the high of the day.
Are most important here. We know what's happening with jet fuel.
We lost Phil just as the conversation was getting good, but those are going to be two big metrics to watch. The other is that the street's been trying to suss out which carriers are most exposed to oil and crude and jet fuel. Delta, for example, some argue is one of the least exposed. That's one reason I think it was Citi last week put a positive catalyst watch on Delta because of all this.
I mean, the costs go up, and this is obviously one of the industries in the crosshairs. Just the Senate is returning this afternoon, but this DHS shutdown doesn't appear to be thawing. You know, the fight here, pretty bitter battle against the Democrats changes to immigration. The Republicans are saying holding the whole thing up. I think proposal of funding the TSA and other parts of the Department of Homeland Security, maybe except for ICE. I'm not sure how much traction that's getting, but I mean, clearly this is a disaster. I mean, we don't have people not getting paid.
No, I know. We've
We're also dealing with terrorism. We have, and Department of Homeland Security needs to be funded.
just came out of it, one version of it in the last few months. Meantime, when we come back, legendary venture capitalist Bill Gurley on AI's workforce disruption, the impact on Silicon Valley, and all the broader.
Looking for hedge flows to turn up markedly. Haven't seen it yet. Intel's still going. Intel. Intel.
Yeah, it is a big year for WBD, a big victory for Zaslav. There's a lot of angst in Hollywood about creatively what all the changes that are going on are going to mean. And I'm curious now that the deal is done, like what you're hearing in terms
All right, looking for futures to continue rising. Looks pretty good so far. Hedge flows trying to turn up. Hedge flows.
recall when it's stuck in a range on those levels, and I'm sure Rick will absolutely point out. So I think the key moment.
So NVIDIA, we got Jensen Huang with a keynote speech. Global Tech Conference keynote at 2 p.m. Eastern.
Right. So NVIDIA, it seems like it's an interesting day for semiconductors, Micron, particular here. But when we look here at our chart for NVIDIA specifically, we can see this triangular type shape here. Two trend lines converging toward each other, expressing a increasingly narrowing range of activity here. So that can be kind of counterintuitive because it may feel boring in the short term, but low volatility.
ExxonMobil's still pushing.
Sort of high volatility when you do start to get some kind of breakout activity. So in the shorter term, one of our boundaries might be this trend line here near about 185 to 187 roughly. And then down here, our lower end would come in right around 175 here. To look at some horizontal levels, 170 to 165 here represented an important series of low points that we saw earlier in this year after our very sharp rally to the upside. We had a brief period of flattening out, and then we additionally found support there a couple more times. Didn't quite test it right there, but came close. So to the upside, 195. That's kind of the top of our range that we've seen recently.
Robinhood turning back up. Robinhood.
Took us just shy of 213. So when we do look at our moving averages that we follow here, pretty much sideways, clustered together, right on top of each other, we find our 5-day, 21-day, and 63-day exponential moving averages representing weekly.
Who's reporting today? Anybody? Worth noting. Oklo after the close. Oklo after the close tomorrow. Micron on the 18th. Micron looking at just shy of 10% expected move for Wednesday. Intel still moving. Intel still looking pretty good here. S&P with a nice rally. NVIDIA rallying. NVIDIA.
And that consulting arm, which was the fear of really the software stocks and what led to the sell-off, is IBM's strength. They are already in the room when they're making decisions. Thus, they are deeply integrated and more likely to have those longer-term sales with those bigger corporations. So in regards to my top pick for an AI enterprise solution, it is IBM. On top of that, IBM has solutions and exposure to tokenization. This is a big theme that we're seeing. I know we've talked about this, Diane, where we're going to take the AI rally and we're going to rebrand it to the efficiency rally, and I believe IBM is a big component of that. So stabilization and tokenization, having solutions for that as we see the big banks doing that, and legislation pushing through the system as we get more clarity on the Clarity Act, completely intended. Nonetheless, the third component there is the exposure to the possibility of quantum. That could be really something that could be a potential earnings catalyst. So there is a lot working for IBM. They are not against other AI models. They actually partner with all of them. So any introduction that we see of
NVIDIA trying to keep going here. NVIDIA chips are doing fairly well today. So if you check out SMH is fine. One way to play it, you can play the Qs as well. Jensen's going to be speaking at 2 p.m. at the Global Tech Conference, GDC.
This one, we have a kind of a different situation from our last chart. In this case, we had a sideways pronounced range-bound area, pretty obviously.
Should be a nice tailwind for tech stocks. Jensen speaking today at 2 p.m. Eastern.
See as well, if we were to backtrack, these were notable price levels in the past as well. You can see we often stopped and started there. However, we've had a big breakdown now. Our low point that we
Vistra Energy from the watch list, continuation.
came in right around 221. If we were to backtrack once more, the tariff news shock event low, our worst close right about at that same point here. So that's why we try to keep track of some of these extreme closes. They can often come back into
Vistra Energy.
For now, though, upward channel has been broken. Short-term downtrend with our white trend line there is still in play. Our recent low comes in near 245, so that would be a very short-term breakdown point to watch out for. Now, a much different picture for our moving averages here. In this case, we are quite close to our 5-day dark blue weekly EMA near 248. Our teal monthly comes in at 254, so that would be one place to watch for short-term support as well. We are below our 50 midline on the RSI, trending up.
Vistra Energy. Nice follow through. Vistra. This could be a $100 stock by the end of the year.
We are near the lower end here. Much of our trading activity between about 237 to 250, but
Vistra Energy.
smaller pocket in terms of its peak here, but the intensity was greater. 258, our point of control, the heavy trading area, the bulls want to break through.
All right, Jessica, stop me if you heard this one before. Investors are taking a bite out of Apple so far this year. Obviously, the picture is different on a year-over-year basis, but where do we go from here? Diane, that's a good one. I like that, though. They're taking a bite out of Apple. So this caught my radar for multiple reasons. One is I've discussed with Marley, and I have it with you, Diane. It's my top pick of the year. It's actually Apple from a consumer AI perspective. Now, the reason why I want to bring it up today is one, today we've launched the AirPods Max 2, which we'll see how consumers take that on. But the new influx of the MacBook Neo, as we are facing all of these headwinds that are coming with AI, which is storage, driving up the cost of personal computers to the consumer, Apple's done the impossible and has introduced the Apple Neo MacBook, which is around $600. I personally visited Best Buy over the weekend, and that's the first thing they pointed me to. But what I thought was so interesting and what caught my attention is you can pull something on TikTok called Creator Search Insights. I have access to that as a creator. There was over 7.7 million searches in a matter of 3 days. Purely
Inside day on Apple. 200 days just below.
MacBook Neo. Then there was another over 4 million for another search regarding the new MacBooks. And then if you look online for reviews, those are over 7 million. So that tells me that there is demand. That's the way that those algorithms work. Like we're looking at charts, we're looking for an area of demand where buyers are putting a bid in and are overcoming that area of supply. I think if we could apply the same metrics as we would with TikTok algorithms or social media, we can see a same underlying theme. So if I see this underlying theme that there's this huge demand or at least interest in the MacBook Neo, looking at early sales data, it's 2x, that's going to translate into earnings. And on top of that, when we had the OpenClaw or MoltBot, it's changed its name so many times, a lot of consumers were buying MacBook Minis just to purely run that because of the compliance constraints or security concerns, which all translates into positive app revenue for Apple. So I really think that this is a consumer cycle. They're finally going to give us the AI solutions that we're looking for, but right now they're going to give us the products lineup so they can mesh together into the beautiful things that Apple is known for. All right, Rick, let's get into it. You heard the thesis there. What's the chart look like?
Yes, wider range-bound activity, I guess, would be the theme once again here. In this case, though, I think you could argue that down here, 235 is where we hit our breakout point. We had a repeated ceiling here and then a push to the upside. Then our low came in here.
All right, Apple, a little profit taking. Tech should see a follow through, I would think, in anticipation of Jensen's keynote at GTC, Global Tech Conference. Futures still pushing higher, futures.
Successively here from our peak of 288.62. For now, though, kind of struggling still to retake this level here near 255 mark equal gap and a breakdown point that was also tested as support several times. So our moving averages in this case here trending downward here, prices slipping below that. The slopes have changed from upward to downward here. 255 is our 5-day EMA to the upside. That's our closest one. But down here, 251-day EMA presents
Industrials, we got a lot of puts.
here about 247. So look for about
Those were sold to close.
to improve as well along with price. If you
Sold to close. Let's see, buy to open.
price, it's
Materials, XLB, you got materials.
so now we can see here
Bought to open.
heaviest here around 253 to 260 near our current activity, but we are on the verge of slipping lower here. The next node to the downside
Riot, we got
will be around
9,800 puts. 13 puts for this week. Applied Digital, APLD. Applied Digital. Bought to open 8,700 of the 30 call, April 17th, 30 call. Let's go take a look at that. April 17th, 30 call, APLD.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. All you can ask questions directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Train 360. I'm Diane King Hall. Time now to spotlight the forces impacting the broader market. Joining us for insight is Clayton Allison, portfolio manager, Prime Capital Financial. Clayton, thank you so much for joining us. Let's talk about the big picture of these two market forces. Obviously, one of them seems to be oil. When we sit above 100 or around $100 a barrel, that's rubber beats across the market. Take me through what you're paying attention there and the shock that can come from that. We've obviously come off today at those levels, but what do you notice?
Yeah, thanks, Diane. Thanks for having me. And yeah, we are watching the energy markets quite closely. Obviously, pretty much something changes every day now, especially over the weekend. And we are kind of tracking how limited the traffic in the Strait of Hormuz is and what that kind of has to do with the broader AI supercycle that's going on. We think that these are two broader themes that are powering the markets entirely. One on the energy side, and then two on the AI infrastructure play side as well, since it's the largest infrastructure build out largely in history. And they do,
Okay, looking for higher lows, higher highs on the futures.
they do have overlapping exposures and they kind of play off one another. And we like to have companies that are playing on both sides of those and where they converge ultimately.
So, how do you think about positioning a portfolio when you're concerned, and any market participants, other PMs concerned about
All right, I bought some APLD 3035s for April.
At the same time, the AI boom is still happening. I mean, we've got NVIDIA kicking off their GTC this week, so I'm sure they're going to be talking that up. Tell me your thoughts.
Yeah, and just like any other PM, it's very difficult and very tumultuous and volatile, volatile times like we're seeing right now. That's why you really like to lean back on high quality companies that have larger secular tailwinds. On one side of the plate right now with energy, we like to hold, major oil integrated companies like ExxonMobil. They are type of companies that can weather these types of energy disruptions given their vertical integration. And then other companies such as Broadcom is one that we like on the AI connectivity side with data centers. And then where they kind of converge on both sides of the plate is the fact of energy and power management. And that's one where we really like Eaton Corp that we've had for quite a while in our portfolios, where they're going to be managing the power management systems that go into those data centers to make sure they run smoothly. So it's really having a broad scope.
All right, most of these stocks coming off of recent lows have pretty good odds of follow through. Just give yourself enough time.
Your thought on ExxonMobil, but I'm curious to know why you like that better versus, say, a smaller, exploration company or subset companies.
I think it's once again due to their global diversification and being widely diversified across the entire energy chain from upstream to downstream, rather than just being focused on drilling and E&P for that instance. It kind of does weather our portfolios a little bit more, anchors that volatility, rather than getting whipshot purely by the price of oil that you would largely see in a predominantly drilling company.
And then why Broadcom versus NVIDIA?
Broadcom is
Nice job, Nick.
connectivity, and we're a big fan of the custom silicon going on right now. They have a huge backlog with relationships with Google, Microsoft, OpenAI, where they are building that custom silicon. And right now, they are also one of the leaders in CPOs or co-packaged optic switches, which is moving essentially data from chip to chip via light rather than copper wires, which is a huge bottleneck when it comes to compute processing power. And Meta is actually leveraging that in scale right now. So rather than just being a more GPU and chip-centric play, we're looking more for the nervous system of AI connecting all these GPUs together rather than just the GPU themselves.
Clayton, let me ask you this. I'm curious to know if you're in the camp where your base case is, with regard to the war with Iran, that this is going to be short-lived, 4 to 5 to maybe 6 weeks, the war. Is that your base case?
I think it's hard to have any type of base case. I can't sit here and pretend that I'm a geopolitical expert by any means. That is obviously what the administration is guiding to. Now, once again, there are irrational actors at play. You have to assume that Iran will do whatever they can to maintain any leverage that they can, and that enables them to try to drag out the conflict longer than maybe 4 to 6 weeks, like the administration is pushing forward. But if there can be
All right, let's see. ARM Holdings, looking for that to follow through. ARM. Chips coming off the low. ARM Holdings.
it's up in the air as to what the actual timeline will be.
Okay, volatility has come down some today. The VIX sitting at 23, but still would be considered elevated. Are you expecting
ARM Holdings, looking for it to push off the 50-day, move back up to the top Bollinger Band. RSI rising, MACD stochastics turning. Chips are doing good. Chips are doing well today. SMH. Need to get back above the 50-day. Hopefully, Jensen can say some things that'll spark some interest, some buyers.
Okay, and I want to step back and look at the three names you mentioned. You mentioned Broadcom, you mentioned ExxonMobil, you mentioned Eaton. They touch networking, energy, power infrastructure. When we look at that as a basket, what's the takeaway that you want to leave us with, Clayton?
Essentially, the takeaway is that energy markets can push up very heavily, and we think that this is more of a supply shock, but they are a heavy input into the AI supercycle infrastructure build that is going on, and you have to be.
If you haven't already done so, you may want to take off the 80-75 put credit spread.
And that's where we like essentially energy supply to power management to AI connectivity and having our portfolio diversified across that entire spectrum.
All right, Clayton, we'll leave it there for today. That's Clayton Allison, Portfolio Manager, Prime Capital Financial. Thank you so much, Clayton. Coming up next, the disruptor. Let's take a look at Nebius after it strikes another deal, this time with Meta. Those shares rallying big today. We'll be right back.
All right, futures starting to rise again. Futures.
this after announcing a multi-billion-dollar partnership with Meta. All right, George, I get to chat with you earlier than usual.
Okay, futures pulling back.
Take us through what's going on here with Nebius.
Well, I think if you look across the board and the the infrastructure as a service or artificial intelligence as a service companies like CoreWeave and Nebius, I mean, this company's performing exceptionally well. I mean, year to date, it's up about 49%, so it's bested the market by a considerable amount, nearing the all-time highs that the company published going back to October last year of $135. And
Nebius gapping up today.
Growth and even growth at a profitable clip. Nebius is actually profitable, Diane, in lieu of some of the other companies out there that are spending quite a bit of money. This company is generating a backlog that's just growing tremendously, and today they announced another dedicated $12 billion deal with Meta Platforms. So they announced this new capacity that is in demand for Nebius from Meta Platforms. The deal could also become, over the next 5 years, an additional $15 billion collaboration. So if you just look at the sales for Nebius last year, sales were only about $530 million. This year, they're expected to be around $3 billion. And right now, based on this new deal and the backlog that they had prior to this deal, it's over $30 billion. And that's a tremendous.
Microsoft trying to push higher. Microsoft.
This year's estimated earnings or top line sales. That's why we're seeing a nice reaction.
Microsoft.
Because their backlog
Inside day.
increase
Still basing in IGV. Software, higher low. IBM also with a higher low. IBM. Doji for now. We'll look for IBM. If we see a follow through candle tomorrow, maybe take that long with a stop underneath today's low. IBM. Intel still the top of the list. NASDAQ 100. Intel.
So one thing you'll notice is the stock is off the highs today, and it's gapping higher relative to the price action from last Friday. So what I'm going to do in this case, I'm going to structure a bullish trade, but volatility is still elevated, so selling premium still makes sense. I'm going to look for potential gap fill reversal, which again, if you look at the candlestick chart, corresponds to a gap that it could pull back to, which was on the highest level on Friday, around $115. So I'm basically going to sell the 115 for April now, 115, 110 put spread. Altogether, you can sell that for about $1.75 in credit or $175 a contract. So, in essence,
Intel looks like it wants to keep going.
is to hold the 115 level or higher between now and expiration in the third week of April in 32 days. If that's the case, that premium of $1.75 will erode to zero. In case it doesn't, in case it does fall below that, it's 13 and a quarter. 113 and a quarter is your break even, and you're earning $1.75, but your risk is $3.25. Not only current, the stock hits 110 or lower. So it's not a price continuation trade. It's a trade that's still bullish, but allows us flexibility for the stock to gap fill back to the 115 area in case it does so.
And okay, and it looks like this is non-capital intensive compared to some of the example trades that I see. And it's flexibility. Any other things we should keep in mind about this example trade, George?
Yeah, so all you can lose is the risk on the trade is 3 and a quarter. All you can gain is $1.75. So it's max profit, it's max loss trades contained. It's essentially one way to earn money versus pay money. You can certainly just buy call options or call spreads on this. That would require continuation because the call options are quite expensive.
Chips look very strong. Chips.
What's the, you mentioned
Broadcom trying to get above 129, 329. Broadcom. Microsoft trying to continue. Nvidia just off the high of the day. Intel.
That's again very meaningful. I think the contracts that they have been growing
Intel looks like it wants to go.
Plus the deals, the $12 billion was essentially a committed deal from Meta with a sweetener of potential $15 billion on top. So as long as they continue to secure actual deals, not necessarily contingent deals, there's a possibility this stock just continues to run.
All right, thank you, George. That's George Sillis, our senior markets correspondent with the Disruptor.
Intel coming out of the squeeze.
Coming up next, time for our 360 round. We'll check in on the state of retail after Dollar Tree released its earnings earlier today. We'll be right back.
Trading at Schwab is powered by Ameritrade.
Intel's number 1 on the NASDAQ 100. Number 3 on the S&P 5. Actually, number 2 on the S&P 500 just jumped up a little bit. New York Fangs look okay. Netflix fading a bit. Leaders are Microsoft, Broadcom, and NVIDIA at the present time. Apple's starting to bounce. Apple.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst. Next on investing, 1 p.m. Eastern.
Only on Schwab Network. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away.
Dems may take not just the House, but the Senate too.
Well, I wouldn't say of the prediction markets themselves. When you look at historical data, you'll see that on average, the sitting of the Democratic seats. That's really, really important because that could influence, future legislative agenda as well as, approvals for ongoing conflict into 2027 and 2028. The president and administration has been saying, and they're working to try to keep oil prices from skyrocketing, but they're saying it's a small price to pay. That's how the president frames it when it comes to confronting, the world's major terrorist state here that has been inflicting and spreading terror for decades, including against the U.S. Does that message not resonate with American voters? I think that there is a little bit of ambiguity from the administration even in their messaging, right?
Tesla, ABCD pattern on Tesla.
The goal is not clear, and so what we're seeing is that in polling, that there is 55% that are unsure or not.
Tesla looks like it wants to go ABCD.
When we're thinking about the longer-term implications, what's important from a market's perspective is not just the duration and voter turnout, but how does that impact the federal debt deficit? When we're looking at fiscal policy, the longer we stay involved in this conflict, the more likely it could pressure debts and deficits and help push up that bond term premium, right? That's the yield of which you're being paid, right? That interest rate for holding U.S. Treasuries. So it helps essentially pressure, put that upward pressure on along with inflation. So for us, we're really concerned with U.S. Treasury market, with how long this goes on because of the amount of fiscal spending, right, that goes into this equation.
Right. Kevin Hassett on Sunday said we've already spent probably $11 billion plus. I mean, you're starting to get into numbers that would rival what it would have taken to enhance those health care subsidies. The conversation might also be about opportunity cost and not just the cost itself.
Right, and this is going to be something that is ongoing, and it always comes up around conflict. Is we didn't have enough money for X social.
All right, futures dropping off here. Futures.
Political effort, and so that is something that does come up in messaging. It's something that you're likely to see the Democrats continue to hit on, especially as we head into full-blown midterms, season, which is going to come July, August. And so this is going to come up over and over again, that trade-off and how the administration manages that. Do we get more on the healthcare front as we get closer to election day? More will be revealed, but they have to get a handle on that narrative. What do you think? What are you telling your clients as head of U.S. policy will happen after the midterms if the Democrats do take the House? What sort of policies might we be looking at or might be blocked? Great question. So there are areas of bipartisanship. That's something people do forget. We are looking at a move towards more on crypto and digital assets. You're likely to have more on the front of supporting data centers, an addition policy when we're thinking about energy, not necessarily a transition. So clean energy could also still be on the table, but under the label of alternative energy versus clean energy. So there are lots of areas where we see that is some consensus. The one thing I want to highlight here is that if you have a GOP held Senate, which is our base case, and a Democratic held House, while that gridlock is frustrating for us to watch, right, from the peanut gallery, it's great for markets because it injects a certain amount of certainty into the stock market. Essentially, legislatively, you're going to have a very slow, drawn-out regulatory and legislative process. Things won't move as quickly, and you have markets outperform about 20% over other scenarios.
Yeah, we do like to say markets do love some gridlock. Monica, appreciate it very much. Good discussion.
All right, TRBCX. I'm looking to put some more money back to work. TRBCX. Okay, we took this off about, 6-7 weeks ago now. It's been, wow, it's hard to believe it's been that long. T. Rowe Price, Blue Chip Growth Fund. We had a nice pullback. Okay, more than 10% now. Okay, so, okay, let's just update this. It's about 11%, almost 12%. Pull back from the highs. Okay, we gained 176% since first getting into this position back in 22. All right. Pull back. Phase 2 markup is still in effect. We are pulling back almost 12%, almost 12% now from the high. TRBCX. So I'll be waiting for a week or two of consolidation wherever it decides to base, whether it's at that trend line or the potential breakout buy zone right there. All right, so I'll be looking to buy.
Well, especially given what's going on with fuel prices right now. Higher fuel prices tend to disproportionately impact lower income households. So that's another kind of concern of ours for these dollar stores, like Dollar General and Dollar Tree, is that their core customer base could be a little bit more pressured this year. But again, that might be offset by the fact that we are seeing higher customers.
Bert, I saw you nodding in agreement with some of the things that Arun was just sharing. But I'm curious to know your thoughts in terms of what you notice about traffic and ticket size in the most recent earnings period.
Goldman Sachs, Kate McShane put out a great piece last week that 75% of Dollar Tree's customers have less disposable income this year than last year. Why is that important? Because of Arun and you said, Diane, higher fuel prices, energy is the second highest operating cost for the stores. That's not fully baked in. 70% of consumers are living paycheck to paycheck. So this is really the high watermark for Dollar Tree because the purchasing power is going to be declining against most deciles. And the big manufacturers are giving most of their marketing and merchandising money to the big box retailers. Dollar Tree can only move 2 cases per brand per store per week, where the big box retailers, Costco, Walmart, Winco, Kroger, Walmart, Target, can all move several hundred cases to thousands of cases per store per week. So less investment from the CPG vendors and less purchasing power from consumers leads to an uncertain future.
Uncertain future. Arun, I want to give the floor to you. Quick 30-second final thought.
Yeah, I think one other thing to think about too is, with what's going on with the Middle East, not only are fuel prices rising, we have to keep an eye on ocean freight. And if there's an increase in ocean freight rates, that will also disproportionately impact these dollar stores like Dollar Tree. Dollar Tree is actually a top 10 importer in the United States, and they import obviously low value goods. So that's another thing to keep an eye on as this year unfolds.
Thank you, Arun. That's Arun Sundaram, Senior Vice President of Equity Research at CFRA. And we have Bert Flickinger, Managing Director of Strategic Resource Group, joining us here at the New York Stock Exchange. Thank you so much for joining us as well on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It's available in the App Store and tune in 24/7 on SchwabNetwork.com. Stay with us. You've got Fast Market with Nicole Pedalini, Tom White, and Joe Mazzola coming up next.
All right, S&P did pull back a bit. Microsoft's still pushing a bit higher. NVIDIA's off the high of the day. We have Jensen speaking at 2 p.m. Eastern at the GTC Global Tech Conference. Okay, Tesla back below VWAP. Sort of a spinning top now. I'd like to see a follow through tomorrow.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things
Tesla pulling back rather dramatically here. No follow through. S&P is still torturing the bulls.
Actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met him 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Curious about how companies are performing heading
All right, S&P 200-day is still down here at 6,600, 6,604, I think it was. 6,608. So hedge flows trying to hook upward.
5.1% there. The Dow Jones Industrial Average up 0.8%, up 385 points. The tech heavy Nasdaq up 1.2%, 24,670. And the small caps up 1.1% right now. This is oil.
Futures continue to drift lower.
Back below the 5,000 mark, 49.92. That's down $70 and 95.54 a barrel on oil. We have a big show for you today.
Generation that maybe you would believe elevated volatility would from past experiences. So let's hope we can
Looking to add to some positions or start some new positions, opportunities.
It's really about patience and time being your best ally.
Yeah, I would completely agree. I don't think this is a time, Joe. I think you said it well just then, to sell out of the market. Now you're speaking to hedge funds and institutional investors.
Looking for opportunities.
Many of them are probably watching us, and I understand, and Joe understands, and Amy understands that you're nervous. We get that. The flow of headlines right now is very high, and a lot of it is negative. This is the proverbial wall of worry which the stock market climbs. It will climb this wall of worry. It's a question of how long it takes to do so. And answering that question also goes back to what, Joe, you just said, really the price of oil. Now, you and I have said for the last week that the Straits of Hormuz, the reopening is vitally important, and it is. However, I think the fact that we're seeing oil come down a little bit today, while the straits are still effectively closed, shows that there are some mitigating circumstances here. There is the coordinated release of strategic reserves. There are the two pipelines in the Arabian Peninsula that are taking some pressure off of the flow through the Straits of Hormuz. And then there's just the simple fact that Chinese and Indian tankers are making their way through the Straits of Hormuz with Iranian permission. So it's not as bad as the 20% of oil being off of the market as was initially presumed.
Yeah, social media is just off the charts. Propaganda, a lot of things that are happening.
That will allow the stock market to then focus on the other bricks, which we'll get to. Private credit, AI, all those sorts of things.
Yeah, we're going to get to a lot of trouble spots. Certainly get to private credit as well, one of my favorite areas. Amy, let me get to you, though, as well, and just get your sense in terms of the action so far this morning.
Yeah, no, I agree with everybody else. The stock market's moving up because people are now more optimistic that we're going to get some sort of opening of traffic through the strait. I'm not sure if that's right or not. I don't think anybody really is. And again, as Joe said, we're sort of on a roller coaster. If you're looking through this, though, I do think U.S. investors are more sanguine about what's going to happen here and that it's going to be short and we're going to get through this. If you look at other markets outside the U.S., you've definitely seen more of a hit. And so if you do think that this is going to be short-lived and we're going to get through it, that's where I would be focused.
Low tick alert minus 800.
Yeah.
Okay, here we go.
Of course, is the key. Let's stay there right now. Treasury Secretary down with our Brian
Low tick
Stelter
alert.
in
Let's see how far this goes.
morning. He did make some headlines about the oil market and, of course, the Strait of Hormuz. Brian has more for us and can recap exactly
Hedge flows.
as of this very moment. Brian.
Well, thanks, David. I think it goes right to what you all are talking about, but also to the financial markets in
We
general.
got some support down here at 66.70.
Okay, let's start with actually just the number of barrels that the market may be short, because everybody you guys talk about, we talked about it earlier, David, has a different number. So one of my first questions to the Treasury Secretary this morning here in Paris, France, following the China trade talks, by the way, was sort of by his estimation, how many barrels of oil per day is the market likely missing short in the market every day? Here's what he said.
It looks like the deficit is about 10 or 14, and that's before any of the ships are coming out of the straits. So if you think about the Russian oil, that is somewhere between 9 to 11 days, 12 days of supply without the market moving. There's Iranian oil that's out in the water right now, about 140 million barrels. The Saudis, they have supplies stored around the world that they can release. And then the global SPR release, largest ever, it was 400 million barrels.
All right, so 10 to 14 million barrels a day, guys, that's bigger than some numbers that we've seen from some Wall Street analysts. So the question is, oil's down right now, but it's still at 95. It's still $35 a barrel higher than it was 2 weeks ago. So why is oil not at 110 or 125? And you can see there is the aforementioned Hormuz Strait if we play drinking straight up Hormuz, it might not go so well, guys. So there's been a lot of chatter on the interwebs about, is the Treasury, is Scott Bessent in team, is the White House, somebody kind of intervening, for lack of a better term, in the market. I know it's just internet chatter, but I had to address it. It goes right to the halftime report. So I asked the Treasury Secretary, are you guys basically in the market of oil futures or other contracts? Here's what he said.
When there's big dynamic price action, that always happens. We haven't done that.
You have. Would you do it?
So I'm not sure under what authority or what auspices.
But you have not. I want to be clear because you know that's out.
Yeah.
Don't worry. The Treasuries and the plunge protection team is in focus.
Yeah, people used to say like the Treasury was buying S&Ps. I think that's usually an excuse for people who got too short and got squeezed.
So he said they're not in the market, guys. They're not trading oil futures. They're not trading S&P 500 futures as well. And oil, you can see Brent's about $102 a barrel, but again, not at 122, not at 132 bucks. We'll see what happens. And by the way, we have Dan Jurgen on Power Lunch today, so we'll run some of those comments, then get, of course, the great Dan Jurgen's take on all of it.
From Jurgen as well. Brian Sullivan, though, in Paris. Joe, let me just turn to you on that. I mean, do we move up when oil's down and vice versa? Is that the market we're going to be living with for some time now?
Oh, without question, we're in an environment right now where on a daily basis, if you're trying to put together the puzzle, the first piece of the puzzle is the oil market. And that's an unfortunate environment to be in. Now, to hear that the Treasury Secretary say that they're not participating in the futures market, that gives me comfort. I think that's a good thing. Let the markets play out accordingly. Counting barrels is interesting. Maybe over a very short-term period, that has an effect on the market. But I think ultimately, David, this comes down to the ability to restore security in that strait and have the flow of oil return to where it was prior to this conflict. And that's when you'll get the most significant drop in oil. And I don't think anyone has an inclination, without being a military expert, how you get to that end game.
No, right. Which is why I would just take risk off. Are we still in that mode?
I believe that we are. It's very difficult to step towards risk right now and to take a position and say we're going to go overweight in a particular position. If you want to take a position from an underweight back up to market weight, that's responsible. But to say right now you have the degree of confidence where you're going to go overweight a particular asset class or a sector or an individual equity name, I think that's challenging. Yeah.
Alrighty. All right, so the market started off the day with a nice little pop, fading. We're spinning top doji.
Of other places. So I think actually coming out of this, the oil field services names are going to be sort of best positioned.
You could also look for alternative sources of oil geographically. Obviously, that takes you to regions like Brazil, Petrobras, maybe Mexico, or turn up north and you can find Canadian Natural Resources or Suncor. All of those names are working particularly well right now. The fertilizer names, they're pulling back. I did on March 2nd buy CF Industries, bought that at around 104. I think it's trading currently around 122. There's a lot of volatility embedded in that name. The fertilizer names are very challenged in this environment because the Iranians are significant exporters of urea, which is incredibly important for corn planting.
Yeah, of course, all the inputs, which we only tend to consider when we suddenly watch the price of oil shooting higher. You do Exxon, I think. Jim,
I own some Exxon, and I think, look, for many years there's been this debate about is energy.
All right, Microsoft pushing higher. Microsoft.
2023 through 2025, it was really a lackluster sector.
Microsoft breaking out.
I agree on that. However, I do think you should own energy, David, and I think the easiest place to start is ExxonMobil. So people want to say
Microsoft breaking higher.
I look at them both as the super majors. And here's the thing: these stocks, Exxon in particular, were doing very well before the Iranian crisis developed. Because in these companies, you get not just the exploration and production, but you get the refining, you get the transportation and distribution. And so, to the question of should you be buying these now, I think if you own them, you don't necessarily have to add to them. However, if you have gone through the last few years saying I don't want to own any energy whatsoever, you're really making a mistake. The easiest place to start is to take a toehold position in Exxon, even at this level. It plugs a small hole though in the portfolio. Energy's just not big enough to make you feel good about the moves that you're making as an active hedge against the volatility and the supply challenges and just the market right now that really doesn't look particularly good. And for the better part of 26 probably has not been good because of things
But
like
when you say the market doesn't look particularly good, I'm curious as to what beyond oil is going through your mind.
I think it's the way in which there's no established trend so far in 2026.
Still squeezing right below VWAP.
It's about the financial sector. That's where the overweight positioning in the bullish
Financials have gotten to crush lately. We'll
and
get to
that's
that.
been reversed.
Yeah.
So you can't really find any particular area where you have a high degree of confidence. For me, that's not a good environment to be, thinking about putting added risk on. I think you and I, we will both admit we look at it through a different perspective. I think you would agree you're a little bit more shorter-term trading, tactical, fine, than I am. And what my point is in all of this is if you're a long-term investor, this is exactly the year where you wanted to have a diversified portfolio across many sectors. Thank percent be twice the market weight, but still not feel on an absolute level like, hey, you're betting the whole farm on Exxon and Cheniere.
Yeah.
To further answer your question, if you think about the places that you were rewarded in the last several years, the places where you find comfort, those places just haven't worked so far year to date. The Mag 7, each of them.
All right, market's just sitting here trying to figure out what it's going to do next. We got Jensen speaking at 2 p.m. Eastern. Microsoft is on the move here. Microsoft is on the move. There goes Microsoft. Been waiting for this to break out of this base for the longest time. Okay, we still got a lot of work to do here. Got to get above this level here.
We were about double weight energy coming into this year and through the end of last year. And I think just because we weren't expecting a war in Iran, we just thought that there's global growth was going to be strong just because of almost all the
Microsoft.
easing. There was a lot of fiscal stimulus coming from
Still basing. Once it breaks out of this base, we'll have a better opportunity.
energy and feel fine about it. I think that's a really good place to be. I know we're going to get to this, but we are very underweight tech, and I think I do think this broadening out trade, this sort of more even trade, both from a geographic and a sector perspective, is going to continue to play out.
All right. Let's get to the White House now. The president had been making remarks involving the Kennedy Center, but as is often the case, he's now moved on to other topics, including, of course, the war in Iraq.
Continued
full force over the past few days. They have been literally obliterated. The Air Force is gone. The Navy is gone. Many ships have been sunk. They're war-fighting ships, but I guess they didn't know how to use them. And anti-aircraft is decimated. Their radar is gone, and their leaders are gone. Other than that, they're doing quite well. They've been
Wise guy.
for 47 years, and now I guess the world, through the United States, with the help of Israel, is doing what should have been done many years ago. Should have been done many years ago. Since the beginning of the conference,
Microsoft's still going here. Okay, you can see the daily on the right needs, we got a lot of work to do, so I wouldn't get too excited. But looking good. A lot of tech stocks were off last week.
missile launches and a 95% reduction in drone attacks. The missiles are trickling in now at very low levels because they don't have too many missiles left. We've also attacked the manufacturing plants, where the places where they manufacture the missiles and the drones.
Doji on Intel.
Today, we just hit 3 of them today. It's getting very hard for them to manufacture. More than 100 Iranian naval vessels have been sunk or destroyed over the last week and a half. It has to be some kind of a record. Additional strikes continue to launch from all directions every single hour. As you know, we attacked Cargo Island and knocked it literally, destroyed everything on the island except for the area where the oil is. I call it the pipes. We left the pipes. We didn't want to do that, but we will do that. We can do that on 5 minutes notice. It'll be over. But for purposes of someday rebuilding that country, I guess we did the right thing. But it's
Looking for some opportunities
one simple word, and the pipes will be
for longer term positions. Looking for opportunities for longer term positions as breadth improves. Breadth improving across the board. S&P big caps, mid caps, small caps, and NASDAQ in descending order.
To the best of our knowledge, all of their mine-laying ships. Now they can put them on other types of ships, I guess, and drop them in. But we don't know that any have even been dropped in. We're not sure that any have been. That's the big negative for them if they do. It's a form of suicide. But we don't know that they have dropped any in. But we've hit all 30 of their ships and destroyed them. They're all at the bottom of the sea. We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. Japan gets 95%. China gets 90%. Many of the Europeans get quite a bit. South Korea gets 35%. So we want them to come and help us with the Strait. We have it in very good shape. The countries, I said, we've already taken care of Iran, but now, because of the fact that literally a single terrorist can put something in the water or shoot something or shoot a missile, small missile, and it's fairly close range because it is a tight area, and which is one of the reasons they've always used that as a weapon. Iran has always used that as an economic weapon, and it's not going to be able to be used very long. Numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic. And the level of enthusiasm matters to me. We have some countries where we have 45,000 soldiers, great soldiers, protecting them from harm's way. And we have done a great job. And when we want to know, do you have any minesweepers? Well, we'd rather not get involved, sir.
Okay, S&P dropping off again.
20 years we're protecting you, and you don't want to get involved in something that is very minor. Very few shots going to be taken because they don't have many shots left. But they said, we'd rather not get involved. I just want the fake news media and everybody else to remember that that was said, because when I've been a big critic of all of the protecting of countries, because I know that we'll protect them. And if we ever needed help.
Low tick alert minus 800.
All right, low tick alert.
Just like I knew about the Strait, that it would be a weapon, which I predicted a long time ago, predicted all of this stuff. You guys were very.
Okay, looks like we're headed down to 66.70.
Osama bin Laden would knock out the World Trade Center. I made that prediction a year before he did. I said, you better get him. He's a bad guy. I watched him.
All right, enough. Okay, we know what you're saying here.
Whether you're an experienced investor,
All right, so looks like we're gonna test this low again.
that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes,
Junk bonds.
same goes for where you invest. Level up and invest smart.
All right, junk bonds looked a lot better earlier this morning. They're fading again.
Welcome back to Fast Market right here on Schwab Network. Right now, the Dow Jones Industrial Average up 321 points. The S&P's up 55 points. This after selling off last week. The S&P dropped 1.6% last week and was down for the third week in a row. We're watching shares of Meta rising. A report from Reuters that the company is planning to lay off about 20%, over 20% of its workforce, in order to help to cover some of the costs from the massive investment in AI infrastructure. Meta employed about 79,000 people as of the end of 2025. Is that too many? Also underwent large layoffs about 2 years ago. You may remember that, when about 13% of the workforce was let go. And it's my understanding that this move here will save about $5 to $6 billion in cost savings. And JP Morgan got an overweight rating of and an 820.
Low tick alert minus 800.
So we welcome back here to our conversation, Tom White and Joe Mazzola. Joe, your thoughts on Meta?
Well, look, talk about $6 billion in savings a year. Yeah, that sounds like a lot. But at the same time, when they're generating $165 billion in capex expenses on average, or at least that's what's projected going forward, that's not going to make a big dent. And so I think, look, Meta has made it clear that their path going forward is going to be led by AI, and they're investing in it. They signed a 5-year AI infrastructure deal recently with Nebius. It's worth $27 billion. You got to free up money in order to do all these expansion plans, and that's kind of what we're seeing with the workforce. I think there's two ways to look at this. Number one, you definitely feel for the employees and their families, of course. But I think the second way to look at that is it's possible that Meta is actually starting to see the AI rollout produce some dividends at this point, because they feel that they can do the same amount of capacity with a smaller workforce, a 20% reduction in workforce, even further. So I think it's interesting to look at it that way. There's been no signs that they're going to slow down on that AI capex spend. And interestingly enough, the shares have been kind of in the penalty box. They've been trading. We talked about the fact that Nvidia has been trading in a tight range. Meta's been trading in a range too, which is a little bit wider, and it happens to be at the lower part of that range right now. And whether or not it bounces back up or kind of sits still, or even breaks down below that range, I think we'll probably find that out within the next week or two. Because I don't think Meta, if the market rolls back over, I don't think Meta can withstand withstand that. I think that it probably rolls over too. But I think we'll get that signal within the next couple of weeks.
All right, what do you think here, Tom? And by the way, unlike NVIDIA, these shareholders have had some frustration. When you look at the Mag 7, these are not the happy Mag 7 shareholders. Meta over 1 year is up 5%, 5.5%. Tom, your thoughts on Meta?
Yeah, bear market territory. And the stock's only up 1.8% today on this news. So, yeah, 3.5 billion daily active users across their platform. That's the positive part. They're continuing to grow in double digits, but the CapEx spend, Joe mentioned that, the total is 125, 35, 165 billion dollars expected this year. And now they're going to cut 20% of their employees. Well, this goes into that thesis that AI is going to make everybody more productive. So if you start cutting employees, it's one of the biggest expenses, besides maybe this CapEx spend on AI build out, that should be beneficial to shareholders. But as Joe mentioned, this stock has been fits and starts over the last several months, especially since the last couple of earnings events where the stock shot up and then fell pretty substantially with that $600 being kind of a base here. But yeah, if it comes to fruition, I mean, they haven't really confirmed the reports. It's supposed to take place over a year. I just don't think this is going to be the last one. If you're starting to see this across software, we saw it out of Block, where they're going to cut 40% of their workforce. We saw it out of Amazon. I think this is going to be the theme where AI is going to create more productivity for these companies. But that means they're going to have to start cutting employees. And we've already seen it. New college graduate unemployment levels are, probably double what they are just standard unemployment rates at this point, maybe even higher. They're starting to say right now.
Right. How about we get to some trades? The folks want to see the real deal here. Joe, start us off. You have example trades.
Sure. So, my thesis goes back to the recent price movement in the stock and how it's trading at the bottom part of the range. My expectation is that it eventually will touch that range and break below it, and then push back to some of the lows that we saw in October and into November. And so, in order to do that, what I'm looking at is a calendar trade similar to what we looked at on Friday with Apple, but this one's with Meta. So, in essence, I'd be selling the March 30th 600 put and buying the April 17th 600 put. The calendar at the time that I was pricing it up was around $586. It's expanded quite a bit now. I think it's trading around $7 now, but let's just use that 580 price. At 580, that is what I'm risking, and it gives me the opportunity to get a couple rolls in there. As you can see, the way that this trade benefits is if we do push back down towards those fall lows. 600 is where it expands to. It's kind of apex, and I got two rolls, or the potential to get two rolls in there prior to that. So if it does break through there, you can turn this into a different type of spread trade. You can just continue to hold on to that long put on a breakdown. Now, if it turns around, where's the risk? The risk is that the stock kind of rips back up and moves towards the high end of the range. I just don't see it with the recent pricing pressures that we've seen on the stock and even today's news. I don't necessarily look at that as bullish news. I look at that as a redistribution of their capital spending.
Yeah, Joe, I'll go ahead and break this one down. You're going out 32 days to expiration, buying the April 17th monthly options, a 600 strike put out of the money to the downside by about $25, and then selling in the near term that expires in 14 days, the May 30th or March 30th. Weekly options on that same 600 put. So basically a 3-week wide put calendar to the downside. We've got 580 debit. That's where it was trading earlier. Stock has pulled back closer to that 600 strike, so that's going to expand it. But on those March 30th weekly options that you're selling in this strategy, the really wide bid-ask spread. So it's some price discovery warranted. It's so keep that in mind. Maybe it's trading 650, not really 750 or something like that. But the debit you pay on this type of strategy is going to be a risk. You'll have multiple potential opportunities to roll that short option as you get closer to expiration over the next 14 days. And that's what creates this type of strategy where, yeah, you expect it to go at or near the 600 strike to get those rolls or the rolls on that short option to start to expand in price. That creates bigger credits, that increases potential profitability and reduces risk every time you collect a credit.
Now you can see here from the risk profile, yeah, you want it to go at or near 600, but you've got probably a range between maybe 625 and maybe 575 on the downside for this stock to trade in, where you could potentially remain profitable. And if you do get a slide in the stock and implied volatility levels start to expand, that'll also expand the price of this calendar and the potential rolls on it. So it's downside. It's about that 600 level that I mentioned right there on the chart that has created an area of support, but it seems like the stock continues to go down and hit those levels. But there's the bearish side here. Joe, I'm going to give you the bullish side. Mine's not going to be aggressive. It's going to be a little bit more passive on this one. I'm going to sell a put vertical, but I went up to the April 2nd weekly options here, Joe. So just about 3 weeks to expiration on this one, 17 days on this position, where I'm going to sell the out of the money 615 strike put, and then against it, buy the 600 strike put. So a short, neutral to bullish, $15 wide put vertical. You're collecting. I had a $4 credit, probably trading closer to $4.60 right now, so you can collect a little bit more. But if you collect that $4 credit, that's what you can make, $400 with about $1,100 in risk. But it takes your break even down to on this one, Joe, to $611 to the downside. So you do have that cushion and better probability of success on this trade, Joe.
You do. And the only thing that would concern me a little bit with this one, Tommy, just to be honest, is that, you know, the low that we saw on Friday was around 609, 609, 610. You know, there's a decent chance that maybe if the close is bearish, I mean, we're trading at the lows of the day, and Meta, there's a decent chance you can revisit that thing fairly quickly. So, you know, to me, like I said, it's just the price action that I'm seeing right now in Meta. It doesn't say anything about the company as a whole. It's just kind of looking at the charts and what the charts are telling me.
Yeah, and you know, you've got a probability on that short strike that you sell out of the money on the 615 strike, only about 57% in this point. But that means, hey, your probabilities are still above 50%, but at the same time, you're collecting more credit on a $15 wide short put vertical. So those are those trade-offs that we always talk about, where, hey, the closer you go to where the stock's trading, it's going to be less probability of success, but at the same time, you're going to be collecting more option premium on a vertical like this. So there you go, Nicole. We've got Joe's bearish trade, mine neutral to bullish example.
Yeah, and look, our high of the day was 634, and we're at 624, so we're already $10 off of the high. And to your point, you also saw the low last week, along with the major market averages for this year, right? The S&P hit its lowest point on Friday of 2026. All right, thank you for that. And folks, you can't go away because cash tags is next. So the team from Lightfolio will join us. The latest sentiment data on the trade desk. Fast Market, we'll be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Welcome back to Fast Market. This is the Schwab Network, and I'm glad you are with us. I'm alongside Tom White, and we're taking a look at the trade desk because these shares have fallen almost 30% since the beginning of the year. And that is the topic for today's Cash Tags. For that, we bring in Landon Swan, co-founder of Likefolio. This stock it really has been hit hard overall. It's really taken a turn to the downside. We noted how it's down about 30% year to date. Some of your thoughts on this name?
Yeah, this is a tough one. I mean, if you zoom out to the 2-year chart, it was a pretty wild ride. I think, people got pretty optimistic there for a while. And then, our data turned to the downside, unfortunately, and the stock followed. And it's had some very volatile bumps along the way, up and down. Just recently, when the CEO announced he was buying 6 million shares and they had talks with OpenAI, they ran up from, I think, 25 to 32. We've since pulled back to 27. And this is, I think, just kind of a case of, everything going right for a while, and those PE multiples are getting, larger and larger, and everyone's pricing in the best case scenario. And then when that doesn't happen, that contraction can snap back very quickly. So that's basically what's happened here. I mean, when you look at their 2024 revenue is plus 26%, their 25 was plus 18%, their last quarter was plus 14%. So they're gaining, but they're decelerating. They're going in the wrong direction. That's sort of the bad news, I think, that everyone knows. And now I guess the question is, how are they priced now? Is it fair? Is this, are we heading to the upside? How's the data look? And that's why we're here. And, I can tell you that the data it definitely pulled back significantly since those highs, but it is starting to flatten out to a degree. The bleeding is slowing, definitely. It's still on the wrong side of things, as you can see here, with negative 5% on a year-over-year basis, while some of the, I don't know if this is exactly competition, but some of the competitors who do ads are doing better. Now, obviously, there's a lot more that goes into, consumer demand website visits for Meta and Google.
S&P moving back up.
Specific as a demand side ad platform, and those others are not, but they do sell ads. They are, their business model obviously is sound. They've got 41% margins, and they've got a very high customer retention. I think 95%, especially boosted from their AI platform. I think it's called Kokai, and it's been doing incredible things for the customers. Better cost per acquisition by about 26%, better cost per reach by about 58%. So they're doing very well delivering to their customers. It's just a matter of things not growing as quickly as they were, and that price to perfection snapping back when people realize that perfection isn't there for TTD.
Yeah, Landon, it's just a competitive thing.
S&P.
The CEO and founder just came out, bought $150 million worth of stock in this, basically, putting, I think it's one of the biggest buybacks in the history, or executive buying their shares. So that should give you some confidence. The OpenAI potential partnership. I mean, just look at this, 80% off of those all-time highs for this stock. It's like, is it cheap on a valuation basis where, hey, maybe it shouldn't be worth $27, maybe it should be worth $35, which is still, far below its all-time highs, because it seems like the competitive pressures are taking a lot of maybe the outlook away from this company.
Yeah, I think there's some competitive pressure.
S&P trying to climb back above 6,700.
Using their platform, but there's also some advertiser confidence issues, and we're seeing that in our data. It's obviously a much smaller sample size, but advertisers are less confident. They're watching where they spend. They're really tracking things more closely. They want to see that ROI. I think they get it from TTD. They get the ROI. They get strong numbers. But just overall, they're probably spending less, which is, making things a little bit more difficult for Trade Desk. But you're right. If you're looking for, a signal of confidence, the CEO putting in $150 million, the company upping their buyback program to up to $500 million. These are things that you do when you're confident in your company. And so at these prices, I think the CEO and the company themselves are basically saying, we think we're very undervalued here. I think their PE ratio is now around 30. So it's not ridiculous, but for a tech company, that's fairly low, especially when you look at where they were. And again, they're continuing to grow. It's just that growth rate is slowing, which nobody wants to see. And you can sort of see the downtrend in the data here. This blue line, that's our data. This dotted line is the stock price. So, we moved a lot lower a few months before the stock has, but we've baselined out now. I mean, we're down on a year-over-year basis, but when you look, you kind of zoom in a little bit, we're pretty flat. It feels like in the data world, it feels like we're kind of at the bottom, and this could be a bit of a bottom for the stock. So longer term, I think that, I think it's justified to be bullish here at these prices. $27 or whatever it's trading at, it's pretty low. And when you look at how well all the things that they're doing for their customers, again, 95% retention. They've got incredible statistics for cost per acquisition, cost per reach. They've got really interesting and dynamic ways of targeting people by a hashed email, where you still have privacy, but you're still getting ads that are served to you based on what you do on other platforms, even outside of Trade Desk, so they know what you like and they're targeting you. That's how they're able to
Bitcoin catching a bid. Bitcoin.
Serving relevant ads to people who are more likely to buy. So they're doing great things. It's just, again, their growth got slowed and nobody wants to see that. So at this point, you kind of got to ask yourself, where is the stock headed? And I think that based on the data that we see, this could potentially be a bottom. We track two numbers, Main Street and Wall Street numbers, and the Wall Street number is 24 out of 100. In other words, investors are pretty bearish on it. The Main Street number is 67 out of 100. Not incredible, but still that difference tells us that the consumers and the advertisers like this platform and this service much more than the investors do right now.
Landon Swan, it's great to see you. Thank you so much, co-founder of Likefolio. We appreciate your look there at the trade desk. And as we get ready now for this example trade, we think about the world of advertising and the macro uncertainty, and that's something that weighed. But I do see different price targets from $30 to $55. We also bring in George Sillis with us to take a look. And Tommy, I know you have an example trade.
Yeah, you take a look at their data. They kind of been spot on. When this stock was going up to record highs and then pulled back, Likefolio's data was ahead of that. But, you look at the 80% pullback from those record highs. We're finally starting to see the stock kind of bottom out here. Maybe it goes higher. So I looked at this as far as looking at an option strategy. You buy the shares, right? They're inexpensive or more inexpensive than they have been. That doesn't mean they're going to go higher. It doesn't mean they're done down either. But I looked at a strategy that's just a straight call purchase, buying a deeper in the money call that's got a higher delta that reacts more like the stock. You want to buy 100 shares of the stock, it's going to cost you $2,700, over $2,700, right? If you want to buy an in the money call, and went out to the April 17th monthly options that expire in 32 days, with a 71 delta on this call, so that means if the stock goes up $1, this call will go up 70 cents, right? But then that delta will start to increase as it gets deeper in the money. So this might be that alternative where it's a stock replacement type strategy almost, where you're getting a lot of delta for buying an in the money call as opposed to buying the shares. Now, if you pay a debit of about $3.50, that's going to be your risk. For the equivalent of 100 shares, you buy one deep in the money call, $350 at risk. And it takes your break even on this trade if you buy the April 25 calls for $3.50 up to 28.5. That's less than 5% above the current share price. And you've got over 4 weeks in this position. And because you're buying a directional call like this, it gives you a little bit of flexibility. Say you get a move or some news comes out and a stock pops at 29 or 30 and this thing starts to expand in price. Well, if the market's open, you can maybe close all or a portion of your position if you see that pop in the shares. So this is almost like a stock replacement type strategy, just buying a deep in the money call, in this case about a 71 delta call that reacts like the stock, and it's less expensive than maybe buying the shares. The stock or the company does not pay a dividend, so you're not missing out on that by owning the shares and not collecting a dividend because they don't pay one. So this kind of sets up with if
like Folio's state is right, where maybe it's bottoming out. You're trying to take advantage of some upside over the next basically 32 days. Nicole.
Thank you for that. All right. We really appreciate it, Tom. And after that, we're going to have George Sillis joining us. Tom White, thank you. We're going to have a breakdown of Qualcomm coming up. I did see a sell rating from Seaport on Qualcomm. What's going on with this name that's already been beaten down and getting another downgrade? Market will be back.
Bitcoin trying to get through the 74,000 level.
The markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether we're just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market. It's time for the breakdown, and we're watching Qualcomm today after Seaport Research downgraded these shares to a sell rating from a neutral. The price target, $100, and it's been a rough start for the year for Qualcomm. Shares are down about 20% or over 20% this year. So let's take a look at this. It's a name that went from $205, right? And the 52-week low is 120. Let's break it down.
Futures trying to make higher lows, higher highs. I'm not expecting much. Markets have to base and turn at this area. The 200 day is just below. Markets look good. Semiconductors having a good day. Semiconductors gapping up, holding on to gains for now. We're still below the 50 day. Micron, Bollinger Band starting to expand. Micron looks like it's going to keep going. Catch up with SanDisk, be a $700 stock. SanDisk trading 713. Bollinger Band's here. Similar kind of look to it. Looking for a follow through. Bitcoin turning back up.
Apple is going to be discontinuing Qualcomm's modem chips within their smartphone ecosystem. And they're expected to lose $8 billion in revenue in the next year or so. And that's about 20% of their total sales. So that's been a long-standing story for Qualcomm that a lot of analysts have been pricing in. But nonetheless, you look at sales.
Riot also catching some bullish flow. Inside day for now. BITX, Bitcoin 2 times. Strategy, ETF. Coming out of a squeeze. Looks like this is going to keep going. Excuse me.
Folks are probably going to be hanging on to their PCs and smartphones for maybe a little bit longer because the component prices are increasing. And the marginal improvements from technology aren't necessarily there relative to, let's say, where they were 5 or 6 years ago. But it's kind of an interesting story for Qualcomm because, one of the things I noticed is if you look at the earnings for the next 4 quarters, they're expecting only $11.12. Now, you go forward another 4 quarters, only $11.
ARM Holdings also having a good day. ARM Holdings pushing off the 50 day. Looks like it could start to head towards the 21 day, just overhead at 123.60, and then follow through to the upper Bollinger Bands, retest the all-time highs. RSI's turned up. MACD, stochastics all look good.
This year and around 11.5 times next year's earnings. Now, in the context of, well, it's cheap. Yeah, it's cheap relative to its own historical averages around 14. But typically, if you don't have growth in earnings and sales, you can trade at high single-digit earnings multiples. So that presents a challenge for Qualcomm, and maybe this is why Seaport basically has a $100 price target. And even if you look at the price action in the stock, it looks like it's moving towards the April lows at least $120 as we speak right now.
Went from 205 to 120, and this is despite having an autonomous driving deal with Wave, right? Using their developer, they have AI driver software with Qualcomm's Snapdragon Ride platform. Even with that,
All right, ARM Holdings looks good.
Tom White is joining our conversation too.
ARM Holdings, that's looking better as well. ARM grinding higher, high of the day.
Valuation goes. I mean, this one is cheap on a historical basis, right? The price of sales is pretty good. The free cash flow yield is above 9% at this point. But, you know, as George mentioned, they're going to lose a portion of their business that they got from Apple. Now, remember, you know, Qualcomm has some licensing deals also. They make some of their cash that also. And they've got the different silos of revenue generation between Internet of Things, automotive, the industrial side, along with the smartphone market. But I think that analyst made a key call that, hey, memory prices are going to diminish demand for high-end smartphones, and that's where Qualcomm did really well over the last year and a half, especially with some of the higher-end phones outselling the others. So I looked at a strategy that, if you believe this analyst, maybe you think it's going to pull back. Implied volatility levels, even with the stock down pretty significantly, we're basically at lows that we haven't seen since last April, when that big downturn in the overall market sent us lower. So we're, you know, in bear market territory for these shares at the lowest level in basically 11 months. So I looked at a strategy that takes advantage. Implied volatility levels.
All right, S&P moving back up.
Really elevated. The IV percentile ranks only about 27%.
In the lower half of today's range. Need to see it close in the upper half of today's range.
But you can take a directional bias. In this example, we're looking at the downside if you believe this analyst in the call and putting the sell at $100 price target. So it went out to the April monthly option, so 32 days to expiration on this trade. You're going to avoid earnings, which are on the 29th of April. So while you might take advantage of a pullback, you avoid that event risk here on this type of trade. But buying
Palantir just grinding along. Doji today is day 8 or 9, depending on what you count. Palantir, just this range that we've been watching on Palantir, right below the 50-day, looking for it to break above 155, 160. Those are the call walls. Palantir, I don't believe those changed, right, money? Palantir, no, 155, 160 is still the call walls overhead. 150 is support.
It's not that much below. And as with my example in TTD, where you're just buying a straight call, it gives you that flexibility as far as trade management. Same on this type of trade, where you're buying a directional vertical. If you get that movement down to below 125, below 120, and this spread starts to expand prior to expiration over the next 32 days, that gives you that opportunity or potential to close all or a portion of your position if this thing starts to expand, the market's open, and allows you to kind of get out of maybe all or a portion of your trade. But it's directional.
All right, let's see.
On this type of trade, you need a move to the downside on a percentage basis, probably about just over 5% below the current share price. But I think the
Palantir, you can see.
Earnings, and you've given yourself plenty of duration in this trade. Nicole, about 32 days until that April expiry.
Palantir, Google, all of these are in the same spot. Palantir risk reversal 5.2%.
Right now, and keep it right here, because here on Schwab Network, Next Gen Investing is coming up, and I'll see you at 2 p.m. Eastern Time for the watch list. Join me then.
All right, S&P pulling back.
2 weeks ago, I said, why don't you send some ships over? And he really didn't want to do it. I said, you don't want to do it. We've been with you. You're our oldest ally. And we spend a lot of money on, NATO and all of these things to protect you. I mean, we're protecting them. We're working with them on Ukraine. Ukraine's thousands of miles away, separated by a vast ocean. We don't have to do that. We did it. Well, Biden did it. I mean, I have to be honest with you. Biden got taken to the cleaners. But we worked with them in Ukraine. We don't need to work with them in Ukraine. And then they tell us that we have a mine ship around, and they don't want to do it. I think it's terrible. No, I was very surprised. I told him, we requested 2 aircraft carriers, which they had, and he didn't really want to do it. And then right after the war essentially ended, meaning they were obliterated, he said, I would like to send the aircraft carriers. I said, I don't need them after the war has ended and won. I need it before the war. So I was very not upset. I was not happy with the UK. I think they'll be involved. Yeah, maybe. But they should be involved enthusiastically. We've been protecting these countries for years with NATO, because NATO is us. You can ask Putin. Putin fears us. He doesn't fear. He has no fear of Europe whatsoever. He fears the United States of America and the military that was built by me in the first term. Yeah.
You mentioned the significant amount.
And trusted financial journalists, streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family
Palantir.
be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com. Hello, everybody. Welcome to Next Gen Investing. I'm Sam Barnes, in for Jenny Horn and Alex Coffey today. So let's
Okay, S&P trying to bounce.
a little over halfway through the trading day right now, and we have started with a positive Monday. We haven't actually had one of those in a number of weeks, so we'll take it. We have, of course, got a good start to the week so far. We are up 0.9% on the S&P 500, not managing to hold 6,700 today. That has been technically important. We'll talk to Kevin Green about that in a little second, but we have got green arrows across the board, though we are off the session's highs right now. We've heard from President Trump. He is currently speaking. We're going to hear from Jensen Huang later this afternoon, so plenty of event risk for these markets, but we have started positive as we've seen oil prices very much coming off these highs, and also, of course, the dollar backing off these triple digits as well. So all in all, we have the NASDAQ 100 taking us higher today as technology very much is back in the driver's seat as well today. Beta is well bid. Brent looks supportive. We've had some good-looking data out this morning as well. So all in all, there are reasons to be optimistic, but it seems like a little bit of cautious optimism as, of course, we await more updates with respect to artificial intelligence, and then, of course, what we get with respect to any more headlines
regarding the Strait of Hormuz. But let's check out some of these futures products as well, because as I mentioned, we've actually had the 10-year coming off.
All right, S&P trying to pop a bit more. S&P trying to get back through VWAP, just got rejected again. Repeat of last week. We start to make these moves back through VWAP. That's going to be a change in what we've seen, the character of the markets the last few weeks. Her voice just kills me. Okay.
They showed buildings in Saudi Arabia burning, and they weren't burning. They weren't hit. It was all AI based. Terrible. It's terrible. And that's their only, I think that's the only thing they do well. They're negotiating. And we always talk.
He just got finished saying what I was saying earlier about AI being used, the propaganda tool, things that's not even happening.
I don't know if they're ready yet. They're taking a pounding. I don't know if they're ready yet. And we don't even know their leaders. Look, all of their leaders are dead, as far as we know. But they're all dead. We don't know who we're dealing with. We knocked out the first group. Then the second group met to pick the leader, because the first group was all dead. And the second group got knocked out. They're all dead. Then the third group met. I would think they're a little nervous about meeting. I don't know if they're nervous. Maybe they're not. Maybe they're crazy. They're not nervous. They're crazy.
Okay, Micron, ARM Holdings, Intel, Global Foundries, Strategy. Those are the top five. Micron, ARM, Global Foundries, Intel, and MChip.
What are your advisors telling you about the Ayatollah's son, the new supreme leader? What are they telling you about?
It's not only them, it's you people. I mean, a lot of people are saying that he's badly disfigured. They're saying that he lost his leg, one leg, and he's been hurt very badly. Other people are saying he's dead. Nobody's saying he's 100% healthy. And he hasn't spoken, because the Ayatollah would sit and he'd spew hate from a form of a throne. Not as nice as a throne. I like the English throne much better. But it was a fancy chair. But he'd spew hate from his chair. But you'd see him a lot, right? This one.
What happened? Did we lose the feed? I think we lost the feed.
Exactly the question, isn't it? Each day as we manage to track these headlines.
Strategy, looking for it to push above VWAP. Same with S&P. The Qs above VWAP, IWM, New York Stock Exchange. New York Times bouncing. I saw that one. I almost put it on the watch list. New York Times and Reuters. S&P. Still sitting here. Not feeling that confident in the markets at the moment. Mostly just chop.
on the back of this news. Now, this deal could add
S&P is just sitting here chopping around. Doji on the daily, basically. Spinning top. It's filled out the lower part of the range, so just a large body candle. Not quite into the upper half of the range. RSI rising. So we're close. We're close to a bounce. Let's see what XII looks like. The institutional index still looks like a rounding top. This is the 75 stocks most commonly held in institutions' core portfolio. It's always good to watch this as well. Needs to break out. We've got a blue elder stick, red and blue elder sticks as this rounds. For bulls, we need to break to the upside. S&P 1500. Okay, that's trying to turn back up. 1500, that's the S&P 500, mid cap 400, small cap 600. Watching the histogram, needs to get back above 2, the trigger line. Yeah, the markets are at various levels of extreme. This is a pretty good signal, though. Whenever we see this signal, the number of stocks above the 20 days start to turn. I'm looking for a follow-through day tomorrow. Number of stocks above the 50-day in the lower panel, same thing. Number of stocks above the 200-day, that's starting to hook upward too at 50%. Okay, Broadcom turning back up. Broadcom, having a good day, Broadcom. It did bounce at the 200-day. Broadcom need to see that back above 353. NVIDIA got Jensen in 1 hour. NVIDIA, 1 hour. All right, that's probably going to pop above the 50-day, I would think. NVIDIA.
This was probably a bigger news story than the Nebius deal, in my opinion.
Right, it's interesting that you mentioned on some of that sensitivity in this market, KG, because what was it, 2-3 weeks ago, we were sitting here on a Monday talking about that Citrini report where you would have, what was it, like a 10% unemployment rate and AI drawdown in the S&P 500. Obviously, that's not what we're seeing today, but we're starting to see, obviously, those job cuts, that shift to AI, that spending, and not to mention Meta, as we've been talking about over the last year as well, with these eye-watering salaries that they've been trying to attract top talent and engineers from other companies to move over to their side. But let's park Meta and some of the technology stuff aside here and just focus on some of the earnings we got, because obviously we heard from Dollar Tree today. Ticking higher this morning. What I really thought was interesting was how they're balancing
Looking for a bounce.
rising oil prices story, obviously in a time.
So Oklo has earnings tomorrow. Oklo. Tomorrow after the close, Oklo. Oklo after the close tomorrow, earnings.
This is a company that has been significantly impacted by tariffs, which is also, once again, in limbo. But if you're looking at the revenue that
Amazon finally catching a bid. Amazon. Okay, Amazon. Down here at the 21-day. We've got a nice little pattern here. If we can complete this, higher lows. Looking for prices to get back up to the 50-day. RSI rising. Okay, need to get stochastics to turn back up. MACD is drifting higher. Volume looks okay. Volume looks here okay. So watching Amazon. ARM Holdings, some aggressive positioning on ARM Holdings.
Yeah, I mean, set the bar low. I mean, it's not the only company we've heard giving a sort of conservative guidance to start the year on. I mean, given a lot of lack of visibility, particularly when it comes to the retail space at the moment, higher oil prices, tariffs, consumer behavior. It's a bit of a triple whammy at the moment. Well, let's move over to Circle KG.
Looks like they're active ARM on the 116 call expiring this week. ARM Holdings.
What we're seeing with respect to these crypto prices. Just break down those two stories for us.
Yeah, we're seeing them upgrade to a buy from a hold with a new price target of $136. That's up from $92. They are really enthusiastic when it comes to the strong adoption for U.S. stable coins, if you will.
Okay, Apple turning back up. Apple dipped, turning back up.
For this company, we are still seeing a lot of broad-based adoption, especially if you look at the larger financial institutions that are looking to get into this space as well. This will also actually piggyback off of the U.S. Treasury demand kind of being firmed up, even if we do see some global weakness because of some of the geopolitical events and the macroeconomic events that are taking place. So this is a company that sees a lot of volatility. Obviously, it's relatively new when we're looking at earnings. And so the fundamentals for now are still kind of being sussed out here from the analyst community. But it looks like this group believes that there's a lot of tailwinds for this name, given the stable coin market is really strong.
Okay, Apple turning back up.
Legislation around cryptocurrencies really being finally approved yet as well. So that could be another tailwind for this name.
NVIDIA.
I mean, the industry as a whole got a lot of tailwinds, but no doubt stopped in their tracks a bit since some of these prices have been coming off. But yeah, I mean, you're right. This analyst naming 5 catalysts driving this stock forward and hopefully to propel that to that price target. I really appreciate the details there, KG, and getting us across some of these stocks and the market performance for us. I'll check in with you a bit later. Coming up next, Chart Master. We will chart and trade United and Southwest Airlines after Wells Fargo cut its price targets on both air carriers. That'll be coming up next on Next Gen Investing.
Okay, NVIDIA looking for a follow through. Got Jensen speaking at 2 o'clock.
Stay connected to what moves markets. Download the Schwab Network app.
Futures trying to push higher. We're stuck at VWAP right now. S&P. Love to see this close in the upper half of the day's range, but keep getting rejected at VWAP.
Service wealth management and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Dollar Tree coming off the 200 day. That looks pretty good. Dollar Tree. Walmart, Dollar Tree, Walmart, TJ Maxx, TJ Maxx, Ross Stores. That looks okay. BJ's. No. What's Starbucks doing? Starbucks? No. Okay, so Dollar Tree looks good. Dollar Tree. Dollar Tree having a good day. Earnings. S&P still dealing with VWAP. No follow through.
Channel to the downside here between those two white dashed lines, but for now we seem to have stabilized here at this level near 85. If you were to take a look back here, you can see that represents old highs and subsequent lows as well. So for now, that seems to have been a point where the bulls have found a foothold here, and we have broken out to the upside from that area here. So now we are peaking our head above this level 89. If we were to look back once more, series of old lows, breakout point, lows once again, and now we are seeming to perhaps make a push above that point. If we were to go further, the 95 level stands out as a notable high during our recent decline here, as well as this gap level near about 100. That was the low point before we had our gap down. So now if we were to look at our moving averages that we follow here, we can see that our 5-day weekly EMA in dark blue comes in right here near 89.50.
NVIDIA is still pushing higher. NVIDIA.
Right now, 89.56 is that EMA.
Netflix.
The price activity is. But if we were to move
ARM Holdings. Stocks in the top of the NASDAQ 100. Micron. Micron just sitting here doing nothing. Micron. Intel. Intel turning back up. It is in a big range, Intel. Doji spinning top. Global Foundries, GFS, Global Foundries, moving back up. Strategy. All right, looks like that might do something in today. In the last couple hours. Strategy. MSTR. BITX. Bollinger Band starting to open up top and bottom, looking for a fast move in Bitcoin stocks.
It doesn't exactly seem to be friendly skies to kind of piggyback on all the puns here, but we can see that the things we mentioned earlier, these seem to be perhaps potentially longer term issues here. So to think about a potential trade for the
May 15th expiration. Our green box here, 60 days out, plus or minus a little under 22% potentially, gives us a range of about 70 to 108 or so. So if we were to kind of think about potentially moving lower, we'd be watching, out for strike prices in this area here. So the one trading question for an example would be a put.
Okay, Google, you can see RSI starting to rise. Google looking good.
80.75 put butterfly at a 275 net debit. So a bearish outlook here.
Google,
75 debit paid.
Amazon.
Max loss here. So this would be
Amazon trying to take the high of the day.
max profit 725 if we were to expire right there at the 80 level here. That would be
Nvidia is still pushing, and Jensen's going to be speaking shortly.
now, unlike a conventional butterfly, this would be an unbalanced butterfly. Conventional butterfly, the strikes would be equidistant apart from that central double short strike here. But in this case, we have a bit of a difference here between them, and that gives us one advantage and one disadvantage. The advantage here is that if we were to cross above that 90 level here, we would just flatten out and we would keep a credit here. I believe to 220 or so, and then we would go on our merry way and keep the credit here. The conventional butterfly, that winner could turn into a loser there. The trade-off is that we pay a greater cost up front to put the trade on here. So one example idea, if you think that the turbulence could continue in this name.
All right, we'll be watching. Buckle up, you should say. Look, I'm looking at charts of Southwest Airlines compared to United Airlines, and I mean, it does look like more recently, pretty much moving in tandem, but that hasn't been the case if you look sort of.
Okay, S&P trying to push through VWAP. S&P trying to push through VWAP.
Similarities between the two charts. They are both major airlines, so they're affected by many of these same factors here, but a bit of a different picture in many significant ways. In this case, we had a very big breakout to the upside once we crossed above some of these notable old high points back here. You can see some of these green lines marking high points and gap levels here, 35, 36, and 38 going from lowest to highest there. Then you can see once we crossed above 38, that was a potential, or rather a brief slowdown period here before we broke to the upside once again. Range bound period here, followed by another upside breakout, topping out near 55. But the decline was just about as rapid as the ascent here. In this case, price once again pulled back very quickly here and found footing at that 38 level once again, that same area we had highlighted earlier. So now we are between that point and between 41, which marks the lower end of our range here. So those could be some short-term boundaries to look out for if you're planning on making some kind of play in this name here. So when we look at our moving averages next, 5-day dark blue weekly EMA comes in at 40.30 to the upside. Our long-term 250 one-day EMA, our yearly EMA in orange, 37.44. So price is below most of our faster moving averages here, suggesting the trend is still picking up to the downside here. The longer term moving averages take quite a bit longer to register some of these changes here, so they're more noteworthy if they are indeed breached here. We're getting pretty close to testing that long-term moving average here, so be on the lookout if we start to move below that 37.40 level roughly here. RSI improving somewhat here, but we are at least out of the oversold area here at threshold 30, but we are actually kind of
Nvidia looking better.
Downward sloping trend line as well here, so kind of an interesting setup here.
Off the Friday low, right up against right up against the 50-day. We got Jensen speaking at 2 over at the Global Tech Conference, GTC. Looks like it wants to pop here. Nvidia looks like it wants to pop.
The key trading areas pretty stand out clearly here between about 36.50 to 38 or so.
Where are the call walls on? And
General boundaries would be about 41 to 43 or so. Point of control, very heavy trading activity area, all the way down here, 32.60.
All right, a good look at the chart for Southwest Airlines. Also gaining some altitude today as we see this risk on tone in these markets, oil coming off. But so how would you approach an example trade for Southwest Airlines?
Sure. So looking ahead once again here, I think in some ways, if you were more interested in perhaps a more neutral play, this might be a chart that would be perhaps having a bit more favorable signs. We had our momentum push in the RSI here, so perhaps a little bit of a shorter term duration. April 17th, our yellow box here, plus or minus 14.7% roughly is our expected move over the next month or so. So when we do overlay our other studies here, we can see that it lines up here with some of these notable points that we established in the mid 30s, kind of 35. The general area here is our lower green line. So if we were to kind of target that area for a short put spread, -1 April 17th, 37.5, 32.5 put vertical at a 125 credit would be one example trade you could use. So once again, our max profit is our credit received, that 125 credit here. Max loss would be 375 in this case. So about 1 to 3 in terms of risk reward here.
NVIDIA trying to push a bit higher. NVIDIA.
This would be a setup here where our short put vertical is more of a soft target. You're just looking for us to stay above that break-even price near 36.25, which is about a 8% to the downside as we set our expected move, roughly about 14% here. So it is within that expected area to be sure here. But this trade would be looking for that price to kind of solidify around those notable low extremes that we identified here after the stock has already been beaten up quite a bit. So it is defined risk if things do go the wrong way for this trade here. That 375 max loss would
Amazon at the high of the day. Amazon.
If you kind of kept the spread together here. So this would be a trade that would be banking on that idea. But
Looking like a bounce. Amazon. Bitcoin still not able to follow through. Amazon. NVIDIA. NVIDIA. Marvell. On Semiconductor. Texas Instruments. Lockheed Martin. Lockheed Turning. Shopify. Netflix, nothing. Let's see, APLD, APLD. Vistra Energy from the watch list. Vistra, Chevron, Exxon. Okay, these are all off the high of the day. Intel. Yeah, everything is just kind of just sitting here chopping around. Intel, flat, Doji. Everything is just in doji patterns. Dojis everywhere. Markets are showing dojis. No progress. Nothing's really working. Marriott. Okay, spinning tops. SNDK up quite a bit, 54 handles. SNDK having a good day.
Yeah, just add it to the list of or basically analysts coming out and raising their price targets.
Sienna, Micron. Sienna trying to break out. Micron, Intel.
Bucks out of RBC Capital up from 425. They state that high bandwidth memory, demand in data center playing much larger role for this company. TD Cowen jacked up their price tag 500 from 450. They keep a buy rating. So we've seen that reportedly. This segment's called FOMO, and if you look at the action, the price action in this stock over the last 12 months, I mean, we're up over, basically 350%.
Dow Jones. CRM. All right, CRM got rejected. CRM got rejected at 205 on Thursday. Pulled back on Friday. Still waiting for this to push higher. It's in the upper half of the Bollinger Bands. RSI rising. CRM. FLY coming off the low. Firefly Aerospace coming off the low. Got to get above the 50-day. Having difficulty for now. There's some sellers here at 25.
Trailing PEs in the single digits for a lot of these companies, whether it's Micron or Western Digital or Seagate Technology. Well, the trailing PE for Micron right now, 12-month trailing, about 42. That's, at historical highs for this company. But the forward PE, looking forward, is only about 15 times, just below 15 times forward-looking earnings. And why is that? Well, because the E in the PE ratio continues to expand. Earnings are growing rapidly. The company on last earnings, Diane, gave Q2 EPS estimates of about $8.40.
Stocks are not following through.
Plus or minus 20 cents. Consensus was only $4.71. Revenue for Q2 is the company
Stryker off the low.
18.7 billion plus or minus 400 million.
NTAP.
Only 14 billion. So they just blew out.
Breaking a downtrend. NTAP.
Going into this report. Hit the whisper numbers. They're predicting anywhere about 8.
All right, all these stocks pulling back from the high right here.
On a whisper basis for Wall Street, that's 460% growth year over year for their EPS. Revenue is supposed to rise about.
Okay, so Microsoft was up at the high. That's pulling back now. All right, watch RSI getting oversold again. S&P, big dip here. Looking for a follow through to the upside. Nothing happening yet. We have all this open interest. All this gamma is gone now. All of these sellers, that was pretty big resistance earlier. If you scroll back to 9:30, you can see all that resistance. When prices pull back, they took those positions off for a profit.
position that's already a clean room, right? So maybe that transition to start ramping up production won't be as long. So typically, when you're building out,
S&P, we got VWAP right here.
chip building and chip making, that it takes anywhere from 1 to 3 years to build that out. Taiwan Semi is running into those issues here in the States now. Micron is expanding their footprint here domestically also. But I think diversification in different locations is what they're looking for. They'll be able to compete a little bit better with SK Hynix and Samsung in that area, and the already existing infrastructure might help them. Maybe that's why they're kind of
Bitcoin's trying to break higher right here. Bitcoin, it's right at resistance, trying to break higher on the daily as well as on the shorter time frames. Got resistance right overhead. Be nice to see a close above 75,000.
anticipating right now. I mentioned the stock's trading just about $450 per share. They're expecting on Wednesday after the close a one-day move of about plus or minus $37, $38 either way. It's a high-priced stock. It's just sitting below all-time highs. RSI levels are elevated on this name just because of the expansion that we've seen in the stock's price. So I looked at a strategy that, hey, you can still be bullish on a name like this, but you don't have to be aggressively bullish because anything can happen on these earnings reports, Diane. They could miss EPS, or they could miss on guidance, or they could come out and say that, hey, we've got too much demand for our supply, and that might hurt their forward-looking guidance.
All right, we're trying to break through this level. Bitcoin looks like it wants to go here. Bitcoin. Okay, Bitcoin breaking out.
But you don't have to be aggressive about it. I went out to the March 20th monthly options that expire in just 4 days here on Friday. Going to capture that earnings event. I looked at selling it out of the money neutral to bullish put vertical.
Bitcoin breaking above the high of the day.
420 put, it's out of the money by about $30 to the downside. And then buy the 410 strike put. So a short $10 wide neutral to bullish put vertical. You're going to collect roughly about a 270 credit on it. That credit you collect is what you can make.
A close above 74,000 be the first time in a while.
Now, you've got more risk than your potential reward, okay? Right? Because of those trade-offs we always talk about. You've got a higher probability of success that you're going to be profitable on this type of trade because of that cushion to the downside. If you collect that 270 credit on this type of trade, it takes your break even down to 417.30 to the downside on this one. So there's that cushion that we talked about. The 420 strike put that you're selling in this, about a 68% probability that you're going to be out of the money at expiration, which is what you want, right? You want that higher probability of success on a trade like this because you're risking so much more than the potential reward on it. So this might be the way to look at it, where you can still be, still take that.
All right, NVIDIA just got knocked back down.
A little bit more passive, and you profit if the stock goes higher. You profit if the stock consolidates here, Diane, and then you also profit if the stock goes down but remains above that 417.30 break even to the downside.
I like that.
Would be nice to see some risk on indicators. We only had what, 2 risk on this week?
Not really. I mean, that's I think one of the key things, especially with the $450 stock, Diane. You make a good point. Stay risk defined in these strategies, right? If I don't get the move that you want, if it say it goes lower, I still give myself a chance. And that $730 in risk versus the 270 that I can make, it's still risk defined. The probabilities are in my favor. So even if the stock does fall down to $400 per share, or goes below 400, the max, you know exactly what your max loss is on any potential position that you put on.
Going into this week, we only had two bullish indicators, 2 risk on indicators. We had 6 neutral and 11 bearish. So we got a lot of work to do. Not expecting it all to happen in one day. Making some progress. I'd like to see Bitcoin close above 74,000.
Actually, we invest with Schwab. We have everything we need all in one place.
incentive for college funds.
I've been learning about trading strategies. Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a map?
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. I'm Diane King Hall. Joining me now to do a health check on the real estate sector, specifically REITs. We want to welcome in David Auerbach, Chief Investment Officer at Hoya Capital Real Estate. David, thank you so much for joining us. I know one of the ways you're looking across the sector is kind of like, it feels like a report card theme, right? So let's set the stage for REITs. You looking at it, rating it on an A to an F, let's say. So before we get into individual sectors, when you think broadly speaking about
Looking for Bitcoin to close above 74,000. Probably start adding to BITX.
Well, Diane, first of all, great to be here. Thanks for having me. We are coming out of earnings season for the REIT sector, and we did see more than 60% beat their full-year guidance estimates. We use REIT-owned properties every single day, regardless of what's happening in the macro picture, whether it's an overseas conflict, tariffs, you name the headline, the REITs continue to hum along. As an example of sectors like senior housing. Senior housing is on fire. You can also point to this company, which is spinning off a senior housing portfolio called Janus Living later this week. They did file their IPO paperwork this morning as far as the pricing range. So senior housing is a sector that's really still in major demand with not enough supply out there, looking at the next generations that are ahead. Other sectors that perform well include something like data centers. As an example, we're using a data center to have this conversation right now, or to watch this video at the end of the segment. So people are using data center-owned properties every single day. And obviously, we haven't talked about AI, and AI is used for data centers. Other sectors such as net lease and retail and properties that we use every single day reported very strong earnings. A good example is a company like Tang or SKT. They own outlet malls, but they're more of an experiential focus. And they talk about there's not a new lot of development in retail sector right now, which means our existing real estate becomes that much more valuable with every single day that passes. It's the same thing like farmland. We're not building any more land that's out there, so existing land that's out there becomes more valuable by the day. And that's just a couple of the sectors that are performing very, very well right now.
David, let me jump in. So the takeaway that I'm getting is that's the honor roll, the senior housing, the data center, the net lease REITs. What is it about them? Is there a commonality about them? I mean, I understand for senior housing, there's something to be said about the demographic shift that we're seeing in the country, the aging of the population in America. Is there a common thread?
I would just say that it's properties that are being used or rented every single day. There's just massive demand for retail. We go to the grocery store to buy groceries every single week. We're using data centers through AI every single day.
Market just can't get past itself. Everything is sluggish.
As a result, the revenue machine continues to grow. As I like to say, if you want risk in the world of REITs, you go out and buy yourself a hotel REIT, because that's a one-night contract. But for office sectors that have a lease term of 5 to 10 years, up to a company like Safehold that has a 99-year ground lease term, we feel that the headlines kind of overweigh the sector when really fundamentals are pretty solid across the board, and the stock prices are not being recognized for that performance.
Let's talk about the problem sectors. When you have grades, there's often a problem child, or in this case, a problem sector. We're going through some of the way that you grade REITs, and with offices getting a C grade. Not surprised to see that, especially, given the patterns that we've seen over the past, few years in office. Tell me a little bit about more why they received the lowest grade.
First of all, there are some green shoots that we are seeing in office. As an example, an office REIT in your backyard, SL Green, just announced 100% occupancy last week at 1 Madison after signing a big AI lease. You know, it seems like this is a sector that's really still trying to come out of COVID in some markets, in some areas. The earnings have not caught up to where they were pre-earnings. The leverage and interest costs are impacting some of these guys. But we are starting to see some signs that, like I said, there are some good stories that are coming out there in the world of office. You know, another sector that kind of all plays together would be like apartments, single-family rentals, and storage. For apartments last year, it seemed to be the mantra was heads and beds. Let's just lease the space, because the new lease rates were going down, but the renewal rates, they were able to improve the pricing there. Same thing, we're seeing the headlines with single-family rentals, and we can go into that. But we feel that, you know, single-family rental REITs, the AMHs of the world, the Invitation Homes, they should be able to weather the storm that we're talking about in Washington right now. As we've been saying, that the single-family rental REITs are not...
Okay, Bitcoin looking pretty good here. Bitcoin.
REITs are going to be isolated from any potential legislation that could be out there. Medical office is another good example, a sector that was dramatically overdeveloped, not a lot of new leasing that's going into place there. So you're seeing some troubles from companies like Alexandria Real Estate, cold storage, a couple of the mortgage REIT sectors. There are a few sectors that are seeing some tougher times, but I feel like, again, across every single one of these sectors that's out there, you've got the cream of the crop, the guys that rise to the top, and then you've got some guys that are kind of going through some struggles and issues that are working themselves out. But for those that think the world of REITs are dead, I want to point to one thing. We had a massive self-storage REIT merger announced this morning with Public Storage acquiring National Storage Affiliates, NSA. I mentioned this REIT IPO that's on the horizon. We've seen Blackstone taking out a couple of REITs, of which one just closed last week, Alexander & Baldwin. So M&A activity is alive and well. One more point to hammer on real quick. If you take out the conflict that's happening overseas right now, prior to the conflict, the REITs were able to raise tens of billions of dollars of new debt. The lending window was wide open. So for a lot of these REITs, it's blinders on, focus on the business. How do we maximize our revenue growth, minimize our expense growth to push out
Low tick alert minus 800.
Oh boy. There you go. Low tick alert.
Take out the conflict. So I have to jump in on that because, you know, there are worries about inflation risk now. And obviously, REITs, anything in real estate is highly interest rate sensitive. We got the Fed meeting finishing this week. We're obviously not expecting a move this week, but now the views are being pushed down the road because of the inflation risk, right? If this is short-lived, this may not matter. If it's not, that's a challenge. How do you think about that in the context of how REITs are performing?
Yeah, this is not the first rodeo. We've been down this road before. I think a lot of the management teams I mentioned, they put blinders on and focus on the fundamentals. You know, for a landlord, their job is to lease the space. And I don't necessarily think inflation plays into them leasing the space.
All right, MSTX.
Facets of this. But I do think for those that are concerned about inflation, remember, you buy REITs for dividend income stream. So the question you should ask is my dividend safe? Stock price performance is kind of the extra cherry on top of the sundae, but as long as that dividend income stream remains safe and stable, the REIT industry should weather this volatility storm that we're witnessing.
We'll leave it there for time. Thank you so much. That's David Auerbach, Chief Investment Officer of Voya Capital Real Estate. We appreciate your time. Coming up next, time for Under 30. We'll take a look at rocket companies. Those shares are rallying today after an upgrade. Next in Investing. We'll be right back.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find out what's shaping early market action.
Extreme low tick alert.
All right, so here we go. Dropping off now.
Morning movers covers it all.
S&P.
Low tick alert minus 800.
Everything pulling back now. Can't get out of our own way. Okay, the 200 days down here. I'd hate to see a bearish engulf. Well, it wouldn't be a bearish engulfing, but still an inside day for now. Inside of Friday's price action, no follow through.
In fact, we've talked about rocket companies often on these programs. This is a company that's done a lot in terms of growing its mortgage lending base. It's one of the largest mortgage underwriters, but it's also been growing essentially in other areas besides things like home financing. They provide also real estate services, unsecured loans, auto loans. They also generate a lot of revenue from digital sales and marketing, and real estate services have been growing. So, irrespective of what's going on in the housing market in terms of volume, the revenue base for rocket companies has actually been growing. And I think if you look at Keith Bruyette, they've actually got now an outperform rating, and from a market report rating, price target $22 from $20. They actually see this most recent decline. If you look at the stock today, it's down about 25%. They see it as a compelling price entry here, considering the fact that earnings continue to grow, as well as that the business
Can't get out of their own way. S&P. Didn't expect it was going to be that easy today. Bitcoin, BITX, Bitcoin. Needs to get above 74,000.
Expecting about $1.17 in the next year. So that's about 38% growth in earnings on about 26% sales. These are pretty remarkable numbers for a stock that is concentrated right now in the finance, lending, and the mortgage space, because we know that this area of the market has been weak. And I think this is a company that has been falling in sympathy with the financials. But there's some compelling valuation here from an earnings multiple standpoint. I think this is what Keith Bruyette is looking at, and perhaps a good pivot point on the stock price.
So I am starting to hear, some cautious optimism around the sector, and obviously, Rocket has exposure to housing, right? Although there is still some concern.
Although we're not following through too much, the markets look okay. They look okay. They could be a lot worse, obviously. We could be down by the 200-day moving average. NVIDIA, inside day. NVIDIA with an inside day for now. CRM, inside day. Nike. Boeing, trying to follow through. Boeing. United Health, big range for the last 8 weeks. Goldman Sachs, like to see the banks start to perform, making higher lows on Amazon. Amazon making higher lows. BITX is trying to spend more time above the 20 EMA now over the last few weeks. Bitcoin, BITX, NVIDIA, above the 20 EMA. Amazon, trying to get back above the 20 EMA. Apple, no go on Apple. Microsoft, all right, needs to make a higher high. Microsoft needs to get above 413. MicroStrategy, above the 20 EMA. Looking good. Bitcoin, US dollar. Bitcoin. All right, it's looking pretty strong. Bitcoin.
our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they can
Looking for a push above 74,000.
literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for those 25 years.
Bitcoin.
Purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Invest your way with Schwab.
All right, we need to close above 74,000.
Good afternoon. Welcome to the watch list. I'm Nicole Fedelides. It's 2 p.m. Eastern Time. We're coming to you live on the floor of the New York Stock Exchange with a big show for you today. Stocks are higher all day long and really holding on to the gains. Been holding pretty steady. The Dow's up 350 points. Has been staying there. Also, with the very latest on NVIDIA, the headlines from Jensen Huang's keynote at the NVIDIA GTC conference about to begin from the 16th to 19th. It's huge. We'll go over that. Rick Ducat standing by. He'll look at the unusual options activity in NVIDIA, Micron, which has earnings this week, and Carrier. And our panel looking at the energy sector. The war in the Middle East continues. Oil's at 94.30, much improved from 120 a week ago, right? Stocks right now, after 3 weeks of straight selling, which we haven't seen in a year, are having some up arrows today. The S&P 500 up 1% at 6697. The Nasdaq 100 up 1.1% at 24,667. Dow Jones Industrial average up 0.75%, gaining 344 points, and the Russell up 1%. Oil and gold are both lower. Gold's down $62, and oil's down $4. Look at that. 10-year bond yield 4.23. And guess what's getting a bid? That's Bitcoin again. 74,000
Watching Bitcoin. Stocks are just stuck trying to figure out what they're going to do next.
Yeah, we've seen actually a lot of action within the commodity space as well as the equities. We are up over 1%, close to 1% for the S&P 500 here, Nicole, but we've been kind of consolidating for the last 2 hours or so. If you look at the E-mini S&P 500 futures, we are starting to see maybe some selling pressure taking place when it comes to the contracts, and that volume-weighted average price right now is being tested. So right now we are seeing obviously a little bit of optimism. The tech news from earlier this morning has obviously been a boost to that. We also got very close and tested the 200-day moving average for the futures contracts as well. So we have some technical bounce taking place, but we are still seeing a lot of volatility. The oil market itself trying to hold around this $94, $95-ish area, seeing a little bit of a pullback. But what's actually very interesting, Nicole, tanker rates. If you're looking at the VWET ETF, which tracks tanker rates, that's actually up over 26% today. And that's usually a divergence that does not last that long. Tanker rates.
Come on, Bitcoin, let's go.
Indicator for crude oil. So we are seeing tanker rates re-rate aggressively higher, even though we are seeing crude oil move to the downside here. Once again, a very interesting day when you're looking at the commodity space. And for now, the equity market is trying to hold up. Hopefully, this conference and these comments coming from Jensen Long is only going to reinforce some of the bullish activity for the equities.
We'll have every single comment from the NVIDIA GTC conference. Obviously, 30,000 attendees, 190 countries attending, physical AI, agentic AI, inference AI, all AI factors. We're going to get all things AI. And so anything that comes out of that, we'll be sure to bring that to you folks. So we are standing by on breaking news mode for that. In the meantime, we have the Nebius with another AI deal, this one with Meta, and it's huge, right?
S&P.
We are seeing Nebius and Meta actually inking a deal for $12 billion at least to start. That's going to allow Nebius to provide some AI compute capacity to Meta. And this actually could expand out to $27 billion if Meta does kind of increase some of their consumption of the technology.
S&P 500 still stuck here under VWAP.
So this is actually, once again, a tailwind for the technology trade. Some of the higher beta stocks, as well as the neo cloud stocks, are catching a bid off of this deal. And we'll see, once again, if we're going to be able to kind of hold some of this momentum and maybe some more enthusiasm for investors around the tech trade, kind of gain some traction here over the next couple of days, as we have seen some weakness over the last couple of weeks.
All right. And what about the final hours of trading? I know we've already got some economic data. We're waiting on more earnings. Thoughts?
I think if you're able to close above this 6,700 level for the S&P 500, that's a big win for the bulls. The next day or tomorrow, you would like to get above 6,730. Now, the flows are still showing that 6,740 is going to be the main area of resistance. There's still a lot of call activity taking place there. We get some positive commentary from this conference. Maybe we go up and actually test that. I just get a little bit concerned, Nicole. Once again, if you're looking at the futures, you are seeing some sellers getting in and trying to knock prices down. It hasn't been able to do so yet. If we do see a reversal, you want to see 6,680 to be able to hold. But for now, we're actually kind of holding up. And I know
Futures, every time it hits VWAP, gets rejected. Not expecting much here. Hedge flows need to start ripping higher if this is going to take out these levels overhead. There's not much resistance now, 0 day. So there is a possibility we could rally a bit.
Yeah, I noticed that about the soybean selling off. I do follow it closely, Kevin Green. Right. Now we'll take a look at the bigger picture. Thank you. Adam Coons is with us, Co-Chief Investment Officer at Winthrop Capital. Great to see you. Some of your thoughts on the market.
Yeah, I mean, look, the market's going to be really sensitive to what's happening with the conflict in Iran. I think that's what you're feeling today is just that some of that pressure coming off because it just looks today like this maybe closer to the end than to the beginning. And so I think, markets, at least investors should expect markets in the near term, to be really sensitive to that, and everything else to kind of be pushed to the side. But there are a lot of things moving right now in the market. I think
Futures continue to move higher. Futures
digesting this increase in capex spending, and then obviously you've got the kind of the big story that seems to be hitting at least every other day in the private credit market and how that's flowing through BDC type stocks. So there's still a lot of things under the current that are happening, but regardless, the focus, the thing that's really going to shift markets, at least like I said, in the near term, is just going to be this conflict.
So what do you think? What's your strategy here going forward then?
Well, you need times like this to have your buying list, to have the things that you kind of put to the side that maybe were too rich, and you were kind of looking for them to cheapen up. This is your time to start looking at those lists. But I think the reality is, overall, the market is still relatively strong. I think
futures looking for the follow through. All right, we're peaking out again, not able to get through. Bitcoin trying to push higher. Bitcoin. Okay, that was a nice little pop there in Bitcoin. A close above 74,000 would be great.
flows moving away from the U.S. we think will continue. We saw that tremendously last year, and this year has been no different. So that's part of the play here. And then, frankly, it is this K-shaped economy story that continues to go around. It's true is that, from our standpoint, when you want to play the consumer, right now, we think that you want to stay in that, top 10% type consumer. When you look at the staple names like your Walmart and Costco, those are way too expensive for what they are. And so ironically, these specialty retail like LVMH, like I said, they have very specific brands. They are a little bit of, kind of fad centric, and so you've got to ride the wave. But right now, the brands within that portfolio, we think are strong. Like I said, it's a way to play that kind of upper echelon of the K-shaped economy.
And then just quickly, the international plays. I mean, do you like emerging markets? Do you like certain countries over others?
We do. We kind of like a mixed bag. We're more regional than is specifically saying emerging or developed, and really we like the Southeast Asia kind of region as a whole. We want to stay away from Europe. We think there's just too many headwinds, too many issues there. But yeah, I mean, we like a lot of names in China. We like, obviously, Taiwan Semiconductor on the tech side. South Korea is a region we like, and we still like some pockets of Japan. So it's really concentrated when we're looking internationally at that region over a broad allocation, like I said, to kind of some low growth out of Europe.
And then we want to thank you right there, Adam Coons. Thank you. Winter Capital Management. It's really nice to see you. Glad you were able to be on with us today, Adam. Coming up, Options Corner, and Rick Cat will join us and highlight unusual options activity from the day, looking at NVIDIA, Micron, and Carrier. All names in the news. Stay with us. We'll be right back.
All right, Bitcoin just hanging out here. I'd like to see a close up here above 74,000. Be the first time in like 5 weeks. The higher, the better. Robinhood pushing a bit higher. Robinhood trying to take out this high. Inside day, Robinhood pushing a bit higher. Robinhood. All right, NVIDIA pushing. NVIDIA. Jensen speaking.
Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Bitcoin looks like it wants to go some more. Bitcoin.
Welcome back to the watch list. Time for Options Corner, and we welcome in Rick Ducat. We're looking at options trades, real trades on today's news, and today's news is huge when it comes to NVIDIA with the long-awaited GTC conference. 190 countries, 30,000 attendees, over 700 sessions between now and the 19th of March. So we're going to watch for any breaking news from Jensen Huang and what he's saying now. In the meantime, you're looking at the stock, which is at 185, and the charts and the trade. Rick Ducat.
Sure, I mean, we could probably do a whole segment about NVIDIA options every single day here, but I thought today was an especially appropriate day to find one particular trade and highlight it. And you and Kevin Green did a great job kind of already covering the general news surrounding NVIDIA. So I'll just kind of talk for a moment. The news that traders are probably hoping to hear the most about today is the Rubin chips, the successors to the Blackwell chips here, the next-gen AI computing platform and GPU architecture. So this type of system is made for agentic AI at massive scale inference. So what is inference? Just in general, process of reaching conclusions based on evidence and reason and prior knowledge, something that computers kind of struggle with, to put it lightly here. So kind of filling in missing details to understand the overall implications of what's happening and understand the context. That's the kind of thing that this kind of next iteration of these chips is going to try to focus on more.
NVIDIA, nice, trying to get through the 50-day, getting rejected right here. Once we get above the 50-day, then we can start to look for 195, 200. Microsoft also turning up. Microsoft also on the move.
This was an opening trade as well. All these trades, as always, I always try to find opening trades for this segment here.
Amazon pushing higher. Amazon looking better. Amazon above Friday's high.
The particulars of this one, $2.2 million, as I said, would be our max loss if the stock were to expire at zero. 172.8 million would be the max profit here. And the break even, though, this is kind of what stuck out to me, especially as well as the dollar amount. The break even 172.80 is about 6.6% to the downside. The expected move for this option expiration would be only about 6.5% to the downside. So this is a very short-term bearish play that needs a larger than expected average move, or larger than expected move, just to break even on this one here. However, if it were to kind of start to get beyond that point, we could see some pretty steep appreciation here in the value of this option. So an interesting trade to be sure. Definitely a risky short-term play.
S&P, Microsoft, NVIDIA.
It's worth noting that right now we're seeing NVIDIA going to the highs of the day. You know, as it's moving higher, and Jensen Wong is, getting ready to tell us more. So we'll see whether or not
Intel.
some more about all things AI.
Okay, there goes Intel.
In the meantime, we have news on Micron. We have earnings coming up this week on Micron. What did you see when you look at the chart in the stock?
Intel's popping here. There goes Intel. Here's Intel. Okay, NVIDIA looking good. NVIDIA.
This still won't even be enough to satisfy current demand, even if all that production were to come online today, right now. Micron has previously said they'd only be able to meet about half to 66% of the demand for several of their key customers in the medium term. So just kind of speaking once again to the insatiable demand for these types of storage and memory chips here specifically. A couple other things, price target boost from TD Cowen, 500 from 450. They kept their buy rating. Oh, by the way, if there wasn't enough news as well, too, earnings coming Wednesday in the post market for this particular company as well. So those will be looking to see if they can take out those recent highs. So
Amazon.
was a large trade, pretty much by any definition you could
Amazon breaking higher.
Big dollar amount, long duration, big risk reward, big everything here. So plus 3,000, January 15th, 620 strike calls at a 69.40 debit here. So a bullish trade, kind of in a lot of ways, it's kind of the opposite type of trade as our last one, which was a very short-term trade. This is a much longer-term trade here, and it's also quite far out of the money. So 305 days out for this bullish opening trade here. A $20.8 million debit paid is the max loss here. So obviously a very large dollar amount here. As with all long calls, max profit theoretically could be unlimited here. So break even, this is what is notable about this trade the most, I think. 689.40 would be 53% to the upside over the next 300 days. So not even a year looking for perhaps that big of a move to the upside in this name.
ARM Holdings.
As well, and the longer you go,
ARM Holdings. Pushing a bit. ARM Holdings, RSI rising.
That's projecting about a 64% plus or minus move during that same time horizon here. So definitely a very optimistic trade. And if this trade does start to get above that break even here, it would be $300,000 of profit for every dollar of movement beyond that break even in the underlying stock at the expiration. So again, this could equate to very large potential gains if it were to go the way this trader wants. Micron seeing a higher sizzle than average to 1.9 sizzle, the options volume relative to its 5-day moving average of options volume.
Yeah, so we'll hear from Micron on Wednesday for its earnings. And so that's obviously the big news, also acquiring that Taiwan, that acquisition of that Taiwan fab to make more DRAM and all that. So, okay, last but not least, let's look at Carrier, where you found the final trade there.
Right, an industrial company, maybe not a name you might instantly recognize here, but they make heating systems, air conditioners, building automation systems. So this kind of a more industrial type of product here. Intelligent climate and energy products is their main focus, but also kind of repair, maintenance services, etc. Not too terribly much specific news in this name here, but we did see a very modest price target bump from Wolf Research, 75 from 74, keeping their buy rating. The chart's kind of interesting, though, when you look at it. I mean, we had some pretty big swings to the upside and the downside. We went from 50 to 68 in a little over a month, so a sharp gain of about 36%. And now, though, we've lost about 18% from those highs during a kind of almost the same time period, around 30 days once again. So now we're sitting near some old lows from late January here. So this trade in question, though, was an extremely outsized trade. I like to look for these kind of unusual trades that stand out in terms of their volume and dollar amounts here in names that are perhaps not traded as significantly. So the trade in question, minus 21,165, June 18th, 50 strike puts at a 220 credit. So selling puts here, opening position, the volume exceeds the open interest in this particular contract here. So a neutral to bullish outlook in this name for this trade. 94 days out, the max profit, $4.6 million credit received here. Max loss could be as high as $101 billion theoretically as well. So break even for this one, 47.80, 14.6% to the downside. Expected move would encompass that about 18.6% or so. But, this would be a trade that would be kind of banking on those lows that I kind of pointed out earlier near 50, that holding on, that 50 strike lines up with that double bottom significant low point here. That would be the lowest price we've seen since like 2023 if we were to kind of break through that area here. So extremely outsized trade. Number 2 in terms of the sizzle in the S&P 500, so its current volume versus its 5-day moving average of volume here. So very elevated activity in this name. So this one also, there was a closing trade paired along with this one too. I won't get into the specifics of that one too much, but if you put the volume from those two trades together, it's like 90-some percent, like the high 90% of the volume for this name. So pretty much these two trades dominated this particular market today. Looking for perhaps a bit of a bounce in this name that's been seeing some pretty sharp declines recently, hoping seemingly for them to level out now.
All right, CARR, one to watch. Rick Jacat, thank you. Names in the news, right? Looking at Micron, NVIDIA, and Carrier. Thank you. Great options corner there, folks. And another hot topic is private credit. Of course, you've seen Blue Owl at new lows, Apollo under pressure. All these private credit names are under some pressure.
S&P's trying to push a bit higher.
Withdrawals have been sort of capped. Is there really a problem? Maybe you could be using it in your portfolio.
S&P pushing. S&P is pushing a bit higher. VWAP is down below. A close in the upper half of the daily range would be great for a follow-through day tomorrow. Hedge flows rallying.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Strategy is the number one stock on the NASDAQ 100. MicroStrategy. Strategy back to the high of the day. Strategy.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
MicroStrategy back to the highs. Bitcoin's trying to turn back up. Bitcoin. Okay, Bitcoin's trying to turn back up. BITX. Bitcoin. Bitcoin, I'd like to see it close above 75,000. Would be really make it a little bit easier. Bitcoin looking for the follow through.
We are so confident in the high quality private credit that we use for our clients alongside with other private market investments that we have for them in their portfolios right now.
Were you surprised to see that they're capping withdrawals and things like that? I mean, you saw the evidence, right? Why are they doing that?
Yeah, I think when they start looking at capping the withdrawals, it's really because they have a gate of 5%. We explained to our clients early on how gates work and how they could be gated if they needed their capital for the redemption period. Our clients weren't very concerned about the gates. We were watchful for them, but we noticed that some of the higher quality names did provide their own capital to those liquidity events. And to be fair, a lot of clients were a little worried. So they decided if they wanted to take some money out, they wanted to be able to take it out. So we saw some higher quality names that we use to allow them to do that and open and expand their 5% gates usually. So we're still pretty confident in how private credit is being used in our portfolios. And we are being mindful and watchful of that and making sure that it still fits.
And look, I mean, these are investments that take time. I mean, it's not liquid that you sell it today and it's available. I mean, these are investments in companies that are growing and such. And so you're sort of on the inside track the way wealth managers and insiders are. And that's the exciting part of how, when you look at private credit or private equity. So people do want to get a part of it because it's what you can't get on Wall Street, right? You're not buying one share of whatever. So let's talk about how you can get involved. You want to be part of private credit. I want to be part of it. How do I do it? What should I be looking at?
Well, the first thing is to have a conversation with your wealth advisor to understand the education behind private markets and how private credit and other private instruments work in your portfolio. Like you just mentioned, you can't go in and sell something on a dime like you could for some other ETFs or common stocks. So you want to be very mindful that these assets that you're investing in the private market space are not needed in the short run. Secondly, when you're looking at how and understand why you want them in your portfolio, do you want the non-correlated value to your portfolio and your equities component? Do you need a stream of income? So you want to be very mindful of how you're getting that. And the advisor has to really explain and understand what the client's needs are and make sure that they articulate that to the client and make sure they understand, this is not a stock or an ETF that can be traded in one day. And there is a time frame that's usually quarterly that you can't get access to those funds.
Usually like 3 to 5 years or something like that, right? And you have to put, I don't know, 100,000 down, or what are some of the parameters?
So within the private market space, private equity, sometimes you have 3 to 5 years and you can't get access to it. So that you're looking for more you could have more volatility there, but at the end of the day, those funds are long term, 10 years or out or longer. On the private credit space, where you're getting more yield, maybe a little bit of growth, it's usually a quarterly redemption. So you want to make sure that you know that you don't need that money for at least a year. If there is a gate and they say they can only allow you to take, 50% of your 100,000 out, you want to make sure that you have other liquidity in your portfolio. So depending on which private market investment you're looking at, sure, it could be quarterly or it could be longer, but private equity would be more of we look at that in a 10-year type of time frame or longer.
And then when we hear the president, by the way, saying that the Fed should be cutting rates today, last week he was clamoring about it, really wants the Fed to cut rates because he's concerned about oil moving higher or the economy slowing down a little bit. What do you think the Fed will or wouldn't do now going forward, or should or shouldn't do?
Yeah, well, I think what we're expecting from the Fed is at some point to continue to cut rates. We're in that camp that rates will be cut again this year. I think what you're going to see is that, these are forward-looking investments. So a lot of these future rate cuts are somewhat built into some of these investments already. So we've already reduced how much, for example, if we're using it as cash flow, and we were expecting it to have an 8 to 9% cash flow return in their portfolio over a period of time, we've reduced that already in their clients' modeling in their portfolios to show a lower number. So we're kind of ahead of that. We also believe that the Fed will reduce rates. So we're in the camp of we're expecting it to happen, and we've already planned for it.
What kind of yields can people expect from private credit? Often when they say you invest with money managers, you should look for, 5 to 7% a year type of thing over a long period of time. How much money should you allocate to private credit, and what kind of yields does private credit bring in versus what we normally know?
Yeah. Great question. So some private credit, 6 to 9%, some have been 8 to 12% over the last few years. Have the expectation those numbers will start to come down. So we're modeling lower numbers in our portfolios now. As far as how much should you have in your portfolio, it depends on the size of your portfolio. But if you're looking at a $5 or $10 or $15 million portfolio and you're looking at a private market exposure first, this should be one sleeve of that private market exposure. So we would say 5 to 10% starting of that private market sleeve is what you can start with. You can always add to these investments later as you want to scale. But the education component is very important before we would start any private market. So when our clients understand what private markets are and how private credit fits, we start with a dollar cost scenario where we might start with 5 to 10% of that allocation up front and then add to it as the comfort level is there for the client and where the allocation demands it in their portfolio for their long-term goals.
So you are bringing down numbers and expectations a little bit because things are slowing, but it does normally outpace the general market. I think that's part of the idea, right? If the general market's 5 to 7 and this is 6 to 9, you're not going to underperform the general market for the most part. You could correct me if that's not right, but I do want to know what kind of sectors. I just was seeing more about SpaceX right now, and it made me think, is it a lot of tech, or what are people, when they look to private credit, what kind of sectors are really doing well?
Well, they're very broad based on the sector side. So, there is software, as you've been hearing in the media, that exists in the private sector space for the private credits. But along that line, when you're looking at the sectors, the managers have the ability to go in and out of different sectors as they see fit. and the profile of the 7 to 9% is right, and that's that number we're using is more to 6 to 8 at the moment, depending on how we're using them. But the correlation factor is what clients are really looking at. How is this asset class correlated to my equity exposure, my international equity, my domestic equity exposure? And if the correlation factors are relatively low comparable, they're looking at it either as a hedge against their equity portfolio or a stream of cash flow that they can use down the road when they need or want it to long term. So it's various reasons why people would be using it, but the sectors, there's a variety of sectors that are out there, and that's the nice part about it. Is
All right, we got what, an hour and 22, hour and 23 minutes to go.
Want to be more focused on specific sectors. We don't advise that in our practice. We'd rather be more broad-based and use high-quality names.
Are you worried about the liquidity issue of private credit? I mean, are people overreacting to the worries about private credit, or no? What would you tell them right now?
Yeah, you know, as this news broke in the last few weeks, and we had conversations with our clients and talked about their risk profile and where this space fit in their risk profile, and it's really their longer-term assets, and the, you know, the bandwidth that they needed was years, not months or quarters. Our clients were still very comfortable with staying in private credit as we advised them to. And again, we are looking at the high-quality bandwidth, not the intermediate or low-quality bandwidth of the private credit. So we've had very calm conversations with our clients, educating them before they ever even bought the investments and during the media and understanding what's going on. But there have been some calls, and the calls have remedied to the point of they understand what we're doing and how they fit in their portfolio. We're keeping a watchful eye on our behalf of our clients, and they know that if there needs to be an adjustment, we'll advise them to make it. But at this point, we are comfortable with our exposure. And you know, at the moment, we are adding to clients' portfolios as it sees fit in the allocation that we've advised them to get to in private credit. We're not deviating from that at the moment.
All right. Monish Verma, Varden Wealth Management. Great to see you. Thank you so much. Really appreciate it.
Thanks for having me. Appreciate it.
All right, coming up. How about some value stocks, some names to own in your portfolio? That's next here on the Watch List.
All right, we got an hour and 21 minutes to go. We're looking for futures to do something. Futures, Bitcoin, a little bit, pull back in a little bit. S&P, I'd love to see it close up here north of 6,700.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Portfolio manager at Hennessy Funds, is with me. And of course, we've watched what's happened with the volatility. We know we're in the second week of the Iran war. We've watched oil in particular. But I was just reading how the financial sector broke down below the 200 200-day moving average was bringing the S&P down along with it. Is this a sign that precedes a sell-off?
Okay, still grinding a bit higher.
I was mentioning that I think that we were getting ready to actually begin a rotation away from mega cap and into more breadth in the markets, which, necessarily was going to include probably industrials, healthcare, financials, et cetera. I don't think that's what's going on, but there is something very strange going on, right? Because at the beginning of the year, as we began to rotate out of mega cap, all of the sectors that I just mentioned started to do very well. And we're one portfolio manager within the Hennessy family of funds. It's 17 different funds and $4 billion in assets, all high conviction. And so this is actually the kind of market that is something that we really like. And then, as you point out, we start a war. And the interesting thing, the most interesting thing to me is you start a war, and what we do instead of normally what you would do is retreat into value, lean even harder.
Okay, Microsoft continues to push higher. Microsoft popping a bit more. Still had a lot of work to do, Microsoft, but looking better. Microsoft looking better. Got to get above these pivots over here. Looks good though. S&P. Okay, Amazon's still smoking. Amazon smoking here. Pushing higher. Looks like it's gonna keep. Looks like it'll keep going over the next few days.
Let's just call it the tariff wars for a second. From mid-year, it was all so haphazard that one day you thought you knew what it was going to be. The next day it changed. It went from 10% to no, it's going to be 100%. No, it's going to be 25%. And it was all country by country, and it was all very, haphazard is the only word I can really think of. And what markets want is not that. They want certainty. And
Amazon's still going.
There's an announcement that the end is in sight, and then the next day, it's going to be a long, protracted thing, and oil jumps $20. So I think that this is going to go on until the transactional nature of this administration just decides that there are more negatives than positive and continuing it. And I think once that happens, the price of oil is going to settle and the trade is going to broadly down.
And we've seen, okay, thank you for that. And once they decide there's an off-ramp and they actually do something with that and result with that kind of language. Let's talk about names that you do like, right, or that are interesting to you. Dow Chemical, for example, right?
Amazon is ripping here.
By the way, Dow is kind of part of this sort of schizophrenia that we're in right now in some ways. I mean, we bought it at the beginning of this quarter. It's up something. I haven't looked today because I'm at an ETF conference. It's up something like 44% this quarter. And by the way, the street
Amazon.
A massive drop in earnings and a 9% drop in revenue. But offsetting that is also kind of the expectation that Dow is actually one of these companies that global supply chain, also high oil prices. So there is this
Amazon, you could sell premium as well if you want price action move higher. Sell put premium. Let's see what this looks like. Amazon. All these stocks are still on the left side of the screen. Amazon. Puts are expensive.
part of the same thing. I mean, ADM, I think it's up 59% in the last year. We bought it at the beginning of, in the beginning of January when we rebalanced. And it's up 19% since then. It had historically, or, over something like 8 quarters that it had disappointing numbers. But one of the things about Archer is that I think it's a well-managed company, and they've proven very adept at
Amazon
facing the challenge.
calls being bought.
On the one hand, investing for the future, and they've done it wisely, and on the other hand, balancing that with cost cutting. So I think that they've managed that well, and I think that they're basically being rewarded for it. In the case of
What was very noticeable today was the number of stocks advancing. We're up to 405 stocks advancing on the S&P 500. That's the best we've seen in a couple of weeks, especially this time of day. 405 stocks advancing. The Qs, we got 84 stocks advancing out of 100. And IWM, we got 1,000 stocks advancing. 4-to-1 up volume on the NASDAQ Composite, 6-to-1 on the SPY, more than 9-to-1. It's a major accumulation day for the Qs if this keeps up. NIMO was minus 87. NIMO was minus 87 on Friday. It's back to minus 50. So a 37 basis point move in NIMO. Breadth improving.
As well. So they've done an acquisition of Stellar Energy America, which gives them a whole lot of access to the sort of thermal management within data centers. They've got an emerging market focus in India. I just think it's a good company with products that are going to be in demand for some time.
Yeah, and yes, Bill Davis, you were correct on those Mag 7 names to move away from those names and look at the other, the other 400, 490.30. So thank you, Bill Davis, portfolio manager, Hennessy Funds. Nice to see you, Bill.
Amazon at the high of the day.
Opportunities don't stop when the market day ends.
Bitcoin still above 74,000. I'd like to see us close up here. Bitcoin. Amazon. Nvidia pulling back from the high.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Welcome back. I'm Nicole Pettin-Lees, and we got some breaking news on the visuals from NVIDIA for gaming. So here it is. Jensen Huang's keynote at the NVIDIA GTC conference is underway.
Okay, Amazon, we're looking for a follow-through tomorrow. See if we can't follow through and push towards 220, 223. The 50-day overhead, Amazon. Amazon, higher lows on Amazon. Amazon pushing higher. Okay, we're just transitioning above the 50-day Amazon. So the 20 EMA on the 60-minute. Once it gets above the 20 EMA on the 6-minute, we start thinking long, put a stop underneath the 20 EMA. 10 EMA is crossing up, looking for a follow through.
Right. All right. And let's continue our conversation and expand this panel. Joe Rinaldi is joining us, CIO of Quantum Financial Advisors. Joe, where do you think oil is headed? I was just saying, do you think the 120 was the top? Where could we be headed with this? And are the stocks opportunities?
That's a real challenging question. I think temporarily we peaked out. I think we need to see what goes on with the Strait of Hormuz. But I would not be a buyer of oil stocks in here. I think you missed the boat.
Really? Because a lot of people have come on and said, don't invest in energy. Don't invest in financial. They're selling off. Go for energy. What do you think of that language, Rob?
Well, I think the energy sector's got a lot of free cash flow. I think we've all figured out energy is pretty important. Oil's pretty important. Natural gas is pretty important. So I do think there's an opportunity to pick up some high dividend yielding stocks with some growth, high free cash flow yield. Those stocks are buying back some shares as well. Exxon is a classic example of that. And natural gas stocks are an opportunity as well.
I thought you actually have Exxon, Cheniere, and Williams, right, Rob?
Yeah, we like all the natural gas stocks and the natural gas infrastructure stocks. Look at what European natural gas prices are 5-6 times higher than what they are in the U.S. We need Europe and Asia need more liquefied natural gas, and it needs to come from secure supply sources like the U.S. And so that'll benefit a company like Cheniere, who's the largest exporter of liquefied natural gas in the U.S. And the U.S. is the largest exporter of LNG in the world.
Let's talk about nuclear, utilities, maybe sort of expand it out from good old Exxon, Joe. Is there opportunity there?
We had bought last time we were on the show.
ExxonMobil still trending. Energy stocks, Chevron still trending. XLE trending. Materials, saw a big trade on materials earlier. Calls coming off the low. Materials. Yeah, I'm not eager to do anything yet. It needs to get back above the 50-day. Materials, communications, XLC. Buyers at the low of the day. Still below the 50-day. Range bound. Financials. Nope. Industrials. It's okay. Consumer staples above the 50-day. That's good. Utilities back above the 21-day. Healthcare. Nope. Consumer discretionary. Not really. So there's not a whole lot keeping the markets bullish today. With most sectors are trying to reverse, but XLE, XLP, XLU, everything else is still very negative, trying to reverse. Futures pulling back. Okay, we're looking for a follow through tomorrow, and the number of stocks moving back above their 20-day moving average. If we can get that to follow through, this reversal might start to catch some traction. Number of stocks above the 20-day, looking for that to continue turning up. We're bouncing just above a breakout zone We took this level out beginning of January. We took off to the upside. NVIDIA just giving back. NVIDIA giving back $2 to $3 off the high. So we're looking for this to turn up. Breadth is improving. Breadth is improving across the board. Large caps, mid caps, small caps, and NASDAQ in descending order. The equal weight index bouncing, oversold. Stochastics looking for a follow through. It's a doji for now, below the 50-day. Okay, we got a little bit more than an hour to go, and the markets have pulled back from the high of the day. Google trying to push a bit higher as well. Google. Here's Amazon. Google. Google breaking out. Google breaking out now. Google's on the move. Daily is an inside day, so it's going to take a couple of days to give us some color here. If we break out above yesterday's high, or Friday's high, that would be good.
Important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest
S&P, another bounce.
give my family a happy financial future.
S&P dips and then bounces back and forth, frustrating traders. It is a decent bullish day, so if we can muster a follow-through day tomorrow, that'll give us more to work on. Looking for a rally into the close.
John, we heard from the President of the United States at the White House earlier today. This was at an unrelated event that was scheduled for a meeting of the board of directors of the Kennedy Center. The president's been very involved in the decorations, the artists, and the board membership there. He brought the press in to that meeting and gave them a sense of where he thinks things.
All right, Netflix turning up. Netflix is turning up off the low. Netflix looks like shorts covering. Netflix, some short covering.
And we don't have the soundbite. What the president did say, John, I'm just going to read you the transcript. He said, "We're hammering their capacity to threaten commercial shipping."
There goes Netflix off the low, short covering. Got a doji.
He said, "We hit, to the best of our knowledge, all of their mine-laying ships, and now they can put them on other types of ships we don't know, and we don't know of any that have been dropped in." So the president's saying the U.S. military campaign has been extraordinarily successful against the mine-laying ships, and that the United States doesn't know of any actual mines that have been laid in the Persian Gulf. So one of the questions here, of course, is when is the Gulf going to be reopened? The president had two messages on that. One is that he has known for a long time that the Gulf was a strategic linchpin and that could be threatened. And the second is that he wants foreign military help from China, from France, from the UK, and others to help send naval shipping to reopen the Strait of Hormuz. The president suggesting that some of those countries have agreed to send
Netflix.
He did not say which ones, so he doesn't want to name them, but he's frustrated with those countries who have not. John, back over to you.
And a step back question for you, since you got your finger on the pulse of Washington there. There are a lot of questions about war powers and where this Trump administration action in Iran fits in there. The president does say this is going well, but how many rumblings are there around pressure to end this sooner than the president might want?
Yeah, I mean, the big pressure point that is one that you see on our air all day long, right? The stock market and the price of oil. As long as those are within, manageable bounds, I think you won't see a big outcry up on Capitol Hill from Republicans, which is where the president's base of support is. As you watch the stock market today, I mean, we're in the green on all the major markets right now. Oil is, below 100. That's maybe an acceptable range for the administration. We saw Secretary Besson in Paris this morning talking with Brian, saying, this is the kind of thing that we expected. It's going to last for a couple more weeks, but it's bearable. So as long as you see that, I don't think you're going to see any major political defections from Republicans up on Capitol Hill.
All right, so many factors. Eamon, thank you. Now let's get over to Pippa Stevens for a look at how all of this is impacting.
All right, S&P pulling back. S&P.
Hey, John, so oil is retreating today with some ships moving through the Strait of Hormuz.
Okay, S&P can't get any kind of traction. We're back to VWAP. Not quite a spinning top, but we're at VWAP.
Energy firm Kepler estimates 5 vessels moved through the waterway over the weekend. And CIBC private wealth manager Babin said it offers the market a degree of relief that the worst case scenario may be avoided, but there are still so many unknowns here. Now, the energy sector is coming off a record 12 straight weeks of gains, but it's vastly trailing oil's performance since the war began. And that is a reversal from what we saw prior to the war, when the equities were outperforming the underlying commodity. Now, the sector has increasingly decoupled from the price of oil, thanks in part to a shift in the sector's makeup, with midstream and gas-focused drillers taking on a
CP&G squeezing, turning back up about 50-day. Copang.
meaning investors don't see a windfall for drillers in the back half of the year. John?
All right. Pippa Stevens, thank you. Now let's bring in our panel. Invesco's Brian Levitt, Bartlett's Holly Mazoka. Guys, welcome. Brian, I think you've tended to say that peak uncertainty is a really good time to buy, but policy uncertainty with what we see happening now in Iran.
We're supposed to get bad weather. I think you guys are getting bad weather too, right? Up north? Mondo, if you happen to be listening, just chime in. I think you said you're getting bad weather.
Relatively contained, economic activity picking up. And so you have a good backdrop. The challenge is how long does it persist? And so if in fact last week was the peak in the geopolitical risk index, then yeah, the next 12 months historically, history would suggest should be good for stocks. I don't think any of us know if that's the actual peak.
but I suspect we probably will be getting there sooner rather than later if last week wasn't it.
Holly, any of this throwing you off of your 2026 playbook?
We are recognizing that risks to that growth story are mounting. And one item that is new since the beginning of March is some of the revisions in the data that's coming in. So to Brian's point, we came into this year with a pretty strong foundation, but especially the labor market has weakened pretty significantly. So that's the big question for investors right now, is just being realistic that the overall risks to that continued growth story are higher today than they were just a few weeks ago.
So Brian, how much do rates matter, and how much of that rate picture for stocks is being driven by questions about the labor market? We got some numbers recently that raised some concerns there versus, okay, now we got this oil shock, which could be inflationary if it lasts longer. Of course, the administration is saying it won't last too long.
So here's the good news. The good news is the market came into the year expecting 2 to 3 rate cuts. We've now basically priced that out of the market without substantial disruption to the S&P 500 market, down overall, 4 or 5%. So we've already priced that out. My expectation, I mean, prior to the war, the 10-year rate was had fallen below 4%. That's Holly's point about a weakness in economic activity. And so my perspective on that is that weakness in economic activity is actually going to be good for equities because the Federal Reserve is going to lower interest rates. The U.S. Treasury yield curve. So that was now priced it out. But if you look at the way the market's been behaving since the start of this conflict, you have some things going in the opposite direction of what you want, but not meaningfully. Credit spreads out a little bit, inflation expectations up a bit, the forward curve on oil up, but still, pointing, still down in 12 months, and then finally, that the dollar has strengthened, but not meaningfully. So all of that suggests some challenges, but none of it is pointing towards end of cycle. It's a market that continues to believe we will get back on the path that we were on, really just, 16 calendar days ago.
Or Holly, are we jumping on a rickety bridge and thinking, oh, it's held well so far, but eventually one of these things is going to break through? I mean, how do you handle this uncertainty in a portfolio? How do you recommend that investors rebalance during a time like this?
Yeah, this is where it's really important.
NVIDIA spiking.
From the underlying data. And when we look at where we are,
NVIDIA spiking here.
Corporations have a runway to continue to do pretty well. Earnings expectations for the remainder of the year have held up well.
There goes NVIDIA.
Period of conflict. And a lot of that comes down to this expectation that you can see productivity from AI support margins. And you can see
NVIDIA, nice spike. I don't know what happened. Okay, there goes the S&P.
High tick alert plus 800.
High tick alert.
Is there. So we're watching closely how the consumer reacts to all of this. It's not just the real dollars and cents they're spending on oil, it's how they feel about the dollars and cents that they're spending at the gas pump, that they're spending on healthcare, that they're spending on insurance, and seeing if that consumer sentiment slip spills over into realized consumer spending decline.
And so, Brian, assuming the Fed doesn't move one way or the other, important color Fed for stocks right now, what's going to happen as far as pricing in some movement one way or the other for the rest of the year?
Yeah, I think the Fed will have to signal that they are still open to rate cuts, that they're balancing the risks.
What's TSSI doing? TSSI. TSSI. SMCI. Okay.
So in some ways, as long as inflation expectations remain contained, then weak economic data does not necessarily have to be bad for the market. Weak economic data can bring forward Fed rate cuts, which tend to be supportive of multiples.
Speaking of the Fed, Holly, how much finally does it matter whether it's Warsh or not leading with that.
March isn't as dovish as what the market, I think, originally expected. There's this expectation that he has the ultimate control, and we have to recognize that that is a huge organization with many governors who have lots of voices. And as Brian said, lots of data.
So she just left.
Yeah.
Are you recording her in the car right now?
Just gonna tell her to drive safe traffic. Drive slow. Drive slow, okay? All right, baby. I'll see you shortly.
But it is a time where you can't rely just on that Fed put. You have to make sure that there's a level of defensiveness in the portfolio and a level of quality that can hold you through to the other side.
All right. Solid advice. Holly, Brian, thank you.
Nice to see you.
Now, NVIDIA CEO Jensen Huang giving a keynote address at the company's GTC event in California. Christina Parthenovich is there, joins us with the latest. Christina.
Yeah, NVIDIA giving stockholders exactly what they wanted just now. Jensen Huang just finished saying that their $500 billion backlog of Blackwell and Rubin products that they gave about 5 months ago is now being bumped up to $1 trillion of backlog through 2027. The share price was holding steady at about 2%, but now you can see it climbing roughly.
Low ticker alert -800.
Big newsmakers so far. Aside from that big $1 trillion number, there's been a parade of partnership callouts. Dell, Palantir, CoreWeave, Oracle. You saw IBM, Google, Synopsys, and IBM shares actually moved briefly on the mention, but there hasn't been any new product details per se just yet. CEO Jensen Huang also expanding his telecom push. T-Mobile now joining Nokia and using NVIDIA GPUs to power AI as part of its 6G build-out. NVIDIA first announced the Nokia partnership just last fall. That's when you saw that share price really skyrocket. Intel separately also put out a press release saying its Xeon processors, those are CPUs, will be in NVIDIA's new Rubin rack systems. Worth noting. Previous generation. So this is an existing relationship just carrying forward, not necessarily a new one, and that's why Intel shares aren't really moving on this news. The market overall, though, was waiting for this $500 billion backlog order to be updated. It has been updated, and then we're still waiting for details on the new chip Jensen has teased that he will talk about the CEO, which will involve ROC technology, so just memory on the chip. So
mentioned that was public seemed to get some kind of a bump. Is that bump effect still seen with all the volatility we're also seeing in the market?
John, whenever I write scripts for CNBC, I called it the Midas touch of NVIDIA, and unfortunately, it hasn't necessarily been the case over the last several months, with the exception of that investment in Light, L-I-T-E, ticker, as well as
Amazon.
really popped up. But today, he's mentioned dozens of companies. Are you seeing all of these share prices just soar and all of the markets go up tenfold just within the last 30 minutes or so? Not really, right?
Yeah, a lot of companies you're dealing with. Lumentum is the one that you were looking for. I looked it up for you since you gave me the ticker.
Yeah, sorry, I blanked.
I got you. The ticker gets us there. Christina, thanks. Now let's bring in a couple of NVIDIA shareholders. Doug Clinton of Intelligent Alpha and CNBC.
ARM Holdings looking good.
A requisite capital management. Welcome, Doug. Over the past 12 months, a lot of things have been going on in the markets that we haven't seen before. So can LLMs still figure things out, or are they just flying by?
I think they can figure things out, John, not biased, because at Intelligent Alpha, we do use the large language models to do stock analysis and portfolio management. We had a good start to the year with our GPT ETF. What we do, and I think what we've been benefiting from that the broader industry is getting excited about, is really creating agents that go out and perform specific tasks. We look at macro environment, we look at specific micro components to stocks, and we create a thesis just like a human investment team would. And ultimately, I think we're going to see productivity like we have at Intelligent Alpha go to many other industries as well.
So what's that telling you about NVIDIA right now?
We own NVIDIA. It's one of our top holdings.
Are you adding more, or are you shedding it?
We've been consistently, I'd say, owning it. Our models have liked it really for the last year and a half at this point.
And the models also do like some other infrastructure players. I tell you this though, what's interesting in my opinion is the models have actually softened a little bit on the software trade. I think the models, our models at least, thought we were kind of bottoming. Software's been terrible this year. Everybody knows that. Feels like it's due for a reversion. We've gotten a little bit right now, but our models are now saying this might be it.
That might be it. Like we're not going to go up more, or
the reversion might slow down from here, I think is what our models think. And if you look long term, John, I think this is the question for software. Are the terminal multiples, can we trust in them? Our models are saying it's getting harder and harder.
Bryn, this $1 trillion backlog news out of NVIDIA, it's kind of hard to wrap your mind around a backlog that big. Is that just expected at this point, or does it change the way you look at NVIDIA?
Let me try to contextualize $1 trillion from $1 billion. You think about it, 1 billion seconds is 32 years. 1 trillion seconds is roughly 32,000 years. So I don't see how that's priced in, right? This is such a big amount of money. And I think you asked Doug what happened the last year. Well, I mean, NVIDIA was up 51% over the last year. It's been a wonderful year. I do think from the stock perspective, $200 feels like outer Earth orbit. It just can't get past it. I think ultimately will, but still, I think for investors like myself, that $200 is where we continue to sell calls against it. But to me, what's so incredible is NVIDIA just keeps cannibalizing on their own products, and that's why they're so hard to catch up with. Because while Vera Rubin's getting ramped up, Blackwell's out there, but Vera Rubin's going to cannibalize Blackwell. But that's what NVIDIA and Jensen and his team have been so masterful. It's just being 2 steps ahead of their own products by continuing to have best-in-breed products, which continue to have such a strong moat around the company.
Bryn, this reminds me of Apple years ago when it first hit $1 trillion market cap, and people were saying, "Oh, what it would take to get to $2 trillion. The iPhone's not going to get them there. They got to get another iPhone, the car, or whatever." And actually, they didn't need to do that. I mean, how psychologically do investors have to shift their idea of what's possible when we tend to look at what's possible based on what's happened before?
I think that we continue to get what's possible by the spending of Meta, by the sovereign wealth spending, by Google, by everybody except Apple, by the way. And as long as that spending, that trajectory is just getting bigger while we're waiting to see actually what they're spending all this money for, I'm not exactly sure. Most of that money goes to NVIDIA, right? And so I just think this is continuing to be a really strong name. It's one of the reasons why earnings growth are expected to grow 26% this year, is really NVIDIA and Broadcom are driving the vast majority of those returns.
Okay. Doug, how quickly can your models adjust? You've got this, LLM-driven investment committee, but we've got headlines coming in fast and furious about Strait of Hormuz, about alliances that we used to be able to rely on economically that are now less certain. How are the data sources, and to what degree do you need to put your thumb on the scale a little bit and say, all right, pay a little bit more or less attention to that?
We try not to really put our thumb on the scale, and one of the lessons we've learned, John, building this company over the last couple of years, is trust the models. Oftentimes when I try to think about what would I put my thumb on the scale to influence, a lot of times I end up being wrong. And so what the models really do well is they can consume more information than any human can. They can process all that information and make connections. And so to answer your question, it can pull in information in real time, or we can say, look, let's only look at information every week or every month. Sometimes you don't need to look at it.
searched word on Investopedia last year. Is AI the threat to our jobs? Can you talk about that as far as what you're seeing with respect to artificial intelligence and the debate over productivity versus job displacement?
Yeah, and I think that's a really important point that sometimes gets lost in the shuffle. When people think AI, they think eliminating categories of jobs.
Yeah.
First of all, I think the technology is moving a lot faster than the implementation. There's lots of research stating that really the effect hasn't even begun to kind of weave through the system because it's being implemented by human resources, and it just takes slower than the technology. But I also think there's a whole category of jobs that will be accentuated by AI. It just helps you get a broader perspective on what you're doing more quickly so they can make better decisions, which is really the human element that won't really be replaced by AI, which at this point is still very task-oriented. Agentic is starting to develop, but it still really is a task-oriented tool.
So where are you seeing the most benefits right now and the most under threat as far as sectors and industries are concerned and types of jobs?
Well, I'll give you an example because I think there's also what people don't think about with AI is that it's very case dependent.
Right.
Some firms are a lot more technologically savvy than others and will incorporate a lot more quickly. So let's take a paralegal. 2 paralegals doing the same job. One is at a small, wills and trusts office, and one is at a law firm that serves venture capitalists in Menlo Park. That one is probably going to
Nvidia back down now. Jeez. So much for that pop.
The context matters a lot. Jobs with a lot of regulatory touch points are not going to be replaced by AI for obvious reasons. So I think it's a much more case by case basis than people think. But I think where AI has the potential to replace things are just jobs that include a lot of kind of repetitive tasks. However, you have to think, if you're outsourcing your financial analyst today to AI, who's going to be your MD in 15 years?
Right.
And people aren't thinking about that enough. So I think it's one of these things where we're still kind of figuring out, what the right balance is, and people are going to, come to different conclusions about that.
And in the here and now, I'm just wondering what you and the folks over at M are modeling as far as the potential impact of the Iran war, just on general affordability and how people are feeling about the housing market and feeling about jobs.
All right, I'm all out of these April 8075 strike puts. Put credits on CoreWeave. Took forever.
We're talking about kind of like psychological element to consumers. Number one is pain at the pump.
Yes.
Across the board. So the Iran war obviously has a major impact on that. As long as there's uncertainty around gas prices, which despite the fact that there's been various, attempts at ameliorating that, there's going to be, given the circumstances, I think that's going to be tough, especially as you go into your summer season, which is driving season, tourism season across the U.S. There could definitely be an impact there in terms of the consumer, which is propping up 70% of the economy.
Yeah, and how does that all feed back into the housing market? Because I was having an interesting chat to somebody the other day who said, look, wars come and go. It doesn't really affect them. The housing market right now is hot. I'm just wondering if you are seeing that on the ground or seeing that through your research as far as,
All right, so hedge flows are just watching here. S&P. More range.
Nebius shares are soaring up more than 16% after announcing a big deal with Meta.
More range-bound action.
Is with us with the details. Julie, what are they doing?
Hey, John. Well, Meta shares are also higher on 2 pieces of news. First, about Meta's investment in AI, and second, about how AI could help it cut costs. Meta shares are bouncing back after they dropped on Friday on concerns about its new AI model, which hasn't launched yet. Now, Meta is signing a long-term agreement with Nebius, which is a Dutch cloud computing company, and Meta is now committed to spending up to $27 billion with Nebius, including capacity for one of the first large-scale deployments of NVIDIA's latest AI chips. Now, this comes as analysts celebrate a Reuters report that Meta is considering cutting as much as 20% of its workforce, which JP Morgan estimates would result in the company saving as much as $6.5 billion annually. Bank of America is saying this report of headcount cuts, quote, highlights significant potential AI cost benefits across the sector, saying we think Meta has room to cut further, given outsized investments in both AI and infrastructure, as well as Reality Labs. But Meta does say this Reuters report is a speculative report about theoretical approaches, but John, it certainly speaks to the opportunity that Meta might be creating to have AI.
All right, futures continue to just grind lower.
Julia, isn't that yet
No relief here. Looked like we were going to get something there and just backed off again. Back below 6,700. In the lower half of today's range. Today's range, lower half.
Developing tools for internal use to accelerate their ability to produce new products or iterate, whether it's around AI or other things. But I do think there is this question of maybe they overhired. There's certainly been a lot of reporting about how they are paying some of these engineers incredibly high paychecks, and which would come with an expectation that they're able to do a lot. But as their investment shifts into AI infrastructure costs, like this Nebius deal, you have to wonder whether or not this is a great way to save $6.5 billion by eliminating some of those very human costs of all of these employees. So we'll see what they end up deciding. We do have to note that this report is that they are considering doing these layoffs. It seems like it hasn't been officially decided yet.
Yeah, that $1 trillion backlog for NVIDIA has to come from somewhere, it seems. Julia Borsman, thank you. Well, still ahead, a critical Fed decision on tap this week. Former Dallas Fed President Richard Fisher is going to tell us what he's expecting when closing bell comes right back.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met him 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up for college funds.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Barnes, joining me on the floor of the New York Stock Exchange. Very next for now is the Managing Director of GPO's Fund and author of the Global IPO, The Great Rewriting of Capital Markets, Jeffrey Stewart. Thank you so much for your time.
Thank you for having me.
Really appreciate it. Here is a copy of your book that's coming out this week, I believe.
End of the month.
End of the month. Okay, very good. So just talk us through exactly why you wrote this. You call it the great rewiring of capital markets. What is being rewired and what's so great about it?
Well, when I started as a tech entrepreneur, companies went public all the time, hundreds every year. And then companies stopped going public. And what I saw was the destructive nature of staying private forever.
Right.
At the same time, I was starting companies all over the world, and investors were asking me, how do we get to these great high-growth companies? And I realized that the markets were changing, and that most capital is now global, and most capital wants direct access to these high-growth companies. And luckily, technology and regulation is falling into place, so that's going to happen.
Is that globally that regulation is falling into place? And what is that? I mean, what has changed fundamentally?
Well, I think what's changed is people realize that if they have bad regulation, investors go elsewhere and founders go elsewhere.
Right.
So you've moved to a world where hundreds of millions of people around the world are moving into the middle class, and they have direct access to the markets through their smartphone. But more important is every payroll cycle, billions of dollars are showing up into their passive funds and into their active funds. And those funds are looking for a place to invest, and it's gonna find its way to the IPOs.
Okay, so you're calling it the golden era. Obviously, we've got a pretty good-looking IPO outlook this year with some big names. Just before we went to the break, we named a couple of those that we're expecting to go public this year. Why do you believe that now is a good time?
Well, I think over the last 20 years, you've seen mega IPOs. It was really about staying private and then using the public markets as an exit once most of the juice has been squeezed out. But we're moving now into an era where you can go public earlier with less friction and tap into that credibility of the public market. And that means that investors, once again, will be able to get into companies like NVIDIA. NVIDIA was under $1 billion when it went public. It went up thousands of times. So it's these smaller companies that still have lots and lots of growth ahead of them. Those are the ones that we're excited about. And we think we're going to see hundreds and hundreds of them in the coming years.
When you say small companies, I mean, which sectors are looking to take advantage of this change in regulation and this kind of environment that we're seeing? I mean, has that changed a lot since the beginning of your career when you started, thinking about global IPOs and from what we've seen in history?
All right, Amazon's still pushing higher. Amazon.
I think a lot of the focus right now is on IT.
Nice follow-through day. Amazon. Looking for a push tomorrow. Amazon.
Real estate about to be rewritten because of AI. Construction, manufacturing, material science. Every industry is about to be restructured, kind of the way that steam did at the turn of the century. We're about to have a huge industrial renaissance. And the public markets are the right place to sort that out and direct the capital to where it needs.
But at the same time, I was just having a fascinating chat with my previous guest about that. Is AI creating a tougher entry point for companies? Because, I mean, you're a software guy. You have seen the decimation, that multiple compression we've seen in software, that everyone's just freaking out, throwing babies out with bathwater to figure out who's going to be the winners or the losers here. Is that not scary for those who are wanting to get into the public market?
Well, I think it's very scary for the incumbents. I mean, if I was in insurance right now, I counted on regulation and things being the way that I'm used to as my defensive moat, I'd be worried because startups are using AI to rip through that and enter new markets. You're seeing it in medicine. You're seeing it in professional services. As professional services move from human-based to AI-based, it's going to be really, really exciting. And I think that as an investor,
All right, futures are trying to bounce.
understand an industry and see how technology is going to.
We got 23 minutes to go. 23 minutes to go. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday, March 16th. Looked like we might have a pop for a brief moment there, and we completely reversed it. We're back down below VWAP. S&P. Very choppy day. Right at 6,700. That's a plus. We'd like to see it move a bit higher. Bullish day. Looking for a follow through tomorrow, hopefully.
That's exciting. I mean, I'd love to have all my investments go up 17-fold. But if instead you look back at
Bitcoin trying to push a bit higher. Bitcoin, BTC, USD, Bitcoin.
thousands of times, that's really, really exciting. And I think for
Okay, another range up here at the high. So we need to stay above 74,000.
So it's a great time to be an active investor, even a small investor or a small fund, because there's so much changing.
I'm sure you've seen a fair share of conflicts throughout the time of your career and working in public capital markets as well. I'm just wondering what you're thinking about with respect to the energy shock and this Iran war with so much uncertainty in these markets.
December, that is 62% pretty good odds, but not entire. Worst will likely be in place for the December meeting, but it's an open question whether he makes it for June, John.
It's like a recess appointment, I guess. Now, this
well, technically, John, that's a joke, but it's not a joke because there's a lot of debate about this, that maybe President Trump could make a recess appointment, except Congress doesn't do recess anymore. So he can't do that, but he maybe could do that.
No, but I mean, the Fed can keep Powell in place because there's somebody who's not able to be put into place, and they can vote to have him remain. Now, how much does this complicate, if at all, the likelihood that Powell continues on the Fed after he's chair, not just officially, but even the period in between?
What the hell is my
he's officially supposed to be done and
MACD?
would start.
So that's a good question. Let me just make sure viewers understand that the Fed chair wears essentially three hats. He's chair of the Board of Governors, he's chair of the Federal Market Committee, and he also is a governor of the board. So his term as chair ends May 15th. His term as a governor runs through 2028. And he could decide to stay on, but the existence of the criminal case looks like it might be one of the reasons he might choose to stay on here if the criminal case is still pending.
Yeah, Steve Leisman, thank you. Let's talk more about this with former Dallas Fed president and senior advisor with Jefferies Financial Group, Richard Fisher. Richard, let's start with this Powell situation. I mean, if you wanted to get him out, and fighting in this way with this case doesn't seem to be the way to do it. But if you want to hurt it, I'm confused. What do you think is going to happen here? You ever seen anything like this?
Well, John, first of all, there is an old saying here in Texas that you don't open a can of worms unless you're going to go bass fishing. Piro has opened a can of worms. And I think the administration would like to get Warsh in there. There's no question the finance and banking committees would like to do the same. But they've made it very clear, until this is cleared up and finished, they're not going to move and confirm Warsh. So I want to correct Steve on one thing, which is always risky to do because I think Steve's omniscient. And that is that the Fed chairman of the Federal Reserve is not necessarily the FOMC chairman. The FOMC elects their chairman at the beginning of each year, usually in January. And they elected Powell to chair the FOMC. Now, he could continue on as not chairman if, let's say, this goes on, if Bureau keeps stirring the fire. He could be the chairman of the FOMC for a little bit longer. It would almost be his duty to do so until Warsh takes place and gets elected to be chairman of the FOMC. Again, the chairman of the Fed is not necessarily the chairman of the FOMC. That individual is elected by the committee at the beginning of each year. Jay Powell is elected in January for the year, and we'll have to see what happens with his case and whether or not Warsh can be confirmed on a timely basis.
Hard to keep track of all those hats. Okay, now stepping back to what's actually happening in the macro picture here, what's your take? What is this oil shock's likely impact on price stability? I mean, how long would history suggest that this war in Iran can go on before higher oil prices ripple through economies in, let's say, a non-transitory, more lasting way?
Well, you had Dan Yergin on earlier on one of these shows. There's nobody more expert than Dan, and he was not certain. He can't tell. And I would imagine that the FOMC is going to feel the same way. If this goes on for a long time, it affects not only the price of gasoline, but fertilizer.
All right, let's see if Bitcoin can get a little bit higher here.
So
Bitcoin.
I agree with the market's assessment.
S&P still dropping a bit.
Spend this time during an oppressor explaining that there's just a lot of uncertainty.
Tesla with no follow through today. That's disappointing. I thought Tesla was going to do better than it did.
So to what extent, over time, is the effect of higher oil prices kind of like a tariff?
Well, it's a tax on people that consume gasoline, fertilizer, foodstuffs, etc. Grow food.
I mean, anything that grows or has to move from one place to another, right?
Yeah, but not, plastics, for example, and a lot of inputs that we pointed out in your show before, semiconductors and so on. So we're going to have to see. Let's hope that we prevail in the short term. If this goes on in the longer term, to people like Dan Jurgen can't forecast a price. I certainly cannot. And it definitely would work its way into the inflationary front. Now, it is true the employment situation is probably worsening. The total unemployment number is not that bad, but we're getting reports of companies. You referenced earlier what is likely to happen with Meta. And we'll just have to see what kind of effects that has. And the Fed has that difficult job of balancing between fighting inflation and deflation and also keeping employment at its optimal point.
I am far from an economist, but it seems to me like one of the complicated things about your job is all these things are interconnected, right? I mean, like how high the oil prices are determines what's happening with profitability with a lot of companies, which has an influence on how many people they can afford to employ. And of course, high energy costs influence data center costs in operation.
It's a cost factor. Remember, companies, we invest in these companies to preserve or grow their margins. And it's a question of what kind of cost inputs reduce their ability to grow their margins. Tariffs are one of them. High prices are another one. Labor costs are another. And so I think companies are really looking, as uncertain as they are in the immediate future, how they're going to preserve their margins. And that's what we invest in, John. That's what counts as far as the market's concerned.
Future profits indeed pencils out, investors. Richard Fisher, thank you.
Thank you for having me.
Well, up next, we're tracking the biggest movers as we head into the close. Seema Modi standing by with that. Seema.
Hey, John, NVIDIA is not the only semiconductor stock on the move this hour. We've got the full list after a short break.
Bitcoin hovering right above 74,000. S&P pulling back again. I was hoping that we'd close above 6,700 and VWAP. MACD still drifting lower. Okay, let's see what SCHD. TRBCX at the low. I'm going to add the TRBCX soon. Haven't done it yet. Looking at TRBCX. Investment account. Okay. So we're right at 12%. Right at 12%. %, pull back. All right. All right, so we're probably going to buy soon. TRBCX. You want to start scaling in. It's probably going to bounce in the short term. Could drop another 3 to 5% down to this trend line potentially, or this potential buy zone. So that's what we're looking for. Okay, that looks good. TRBCX. All right, we have what, 11 minutes to go? 11 minutes, 30 seconds to go.
Hey, John, we talked about SanDisk. It's really a strong day in general for memory stocks. Take a look at Micron shares higher after confirming plans to build its second manufacturing site in Taiwan. Separately, RBC Capital Markets reiterating its outperform rating on that stock and raising its price target ahead of earnings on Wednesday. Analysts there, they're forecasting that high bandwidth memory prices will continue to rise going into 2027. Meantime, cruise stocks broadly higher as oil prices are pulling back. Secretary Besson confirming to CNBC that certain oil tankers have been able to travel through the Strait of Hormuz. Carnival, Royal Caribbean up about 2%, but still down.
All right, S&P is starting to bounce a little bit. Would really like this above 6,700. Hedge flows. Okay.
Yeah, just as Richard Fisher was alluding to, Sima, thank you. And up next, behind Bitcoin's bounce, we're going to tell you which stocks are benefiting from today's jump. That and a lot more when we take you inside the market zone. That's next.
All right. CoreWeave. What's NIO doing? NIO. NIO. Gapping up. See if this can follow through. NIO. Nice volume showing institutions are picking up shares of NIO. NIO. However it's pronounced. S&P bouncing. Coming into the closing bell. We've got 8 minutes to go.
They are expecting profitability in 2027. So this year they're expected to still lose around 82 cents a share. But next year they're expected to earn about 6 cents in terms of adjusted profit. I think that's more meaningful to the strong trend this company is actually still committed to showing investors, as well as a nice one-year price action to the upside of about 400%.
Okay, so that path to profitability we often talk about in some of these overlooked stocks, no doubt, is something that investors are looking at very closely. Obviously, a Bitcoin mining company that's now in the business of data centers. I mean, that's not original either. There are a number of those out there that are doing the same thing. I'm just wondering, how it sort of stacks up against the rest and what the analysts think of this, because I see when you look across some of the with that strong endorsement, what some of them are actually saying.
Well, I think it really comes down to a couple things. It's just my evaluation. Covering stocks for so many years is it's one thing to generate sales. It's also another thing to have insufficient capital. I'm going to use CoreWeave as an example. I'm not bashing the company, but I can tell you right now the reason it's not performing as well is it's capital constrained in terms of debt relative to equity. If you look at TeraWulf, they do have about $5.2 billion in debt relative to equity capital, which is around $6.2 billion. So it's less than 1-to-1 ratio. But in the past, couple months or so, when the stock actually started to sell off just marginally, it's been down about 20% in the last about 30 days or so alongside the market. It's recovered in the last just week. They've issued a lot of shares, and right now they have about $3.2 billion in cash on the books as well. So they're very well capitalized as a business, lots of cash, sufficient debt relative to equity, and so these numbers make a big difference in terms of sustainability. And I think that's one of the key ingredients in terms of why the price of the stock has actually held up quite well. It's still very volatile, there's no doubt. Today the stock is up in the double-digit range.
Netflix turning back up.
Tremendous news article about the Kentucky build-out and the $500 million of capital commitment. It just shows you that on days like
Is rallying makes sense. George, really appreciate it. Thanks so much for breaking down the details there. Rallying up at 11.5% right now. We are nearing the end of this market session, so we'll bring in Kevin Green on the other side of the break to break down the levels. He's what's shaking on the S&P 500 and talk about today's action coming up next on Market on Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round.
All right, we got 4 minutes to go. 4 minutes to go.
Most popular stocks and ETFs, plus a wide variety of
4 minutes, 30 seconds to go.
all with 24-hour support from trading specialists.
Futures, just kind of hanging out here, not doing anything. A move back above VWAP would be nice.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
All right, S&P moving back up towards VWAP, 6,700. It looks like we're going to pin right in this area. All of the premiums gone for today.
Well, we had about 2 hours there where we may have just kind of forgot about the geopolitical risk and focused on the technology sector. And I think that was actually a big catalyst for us today. We were able to recover some of the losses that we saw on Friday. But if you look at the 5-day, 15-minute chart, unfortunately, we are still making lower highs. We still
still have to actually kind of break above this 6730-ish area to really kind of give you a sense that the market might be shifting to more of a risk on type of tone. I think for today, you still have to kind of chalk this up as a little bit of a retracement bounce, maybe a little bit of a relief rally, if you will, short covering activity taking place, rather than this being the low for the S&P 500, at least for this particular session or this particular cycle that we've seen this.
1 minute, 40 seconds to go. Coming into the closing bell.
The upside is where we're seeing the majority of the calls activity right now. We do have 3 contracts that have over 100,000 contracts that are traded for today's session. That's a little bit unique from what we saw last week, where options volume for the most part on the index level was a little bit light. And if we're able to hold and stay above 6,680, I think it would be a win for us here today. But I still would be a little bit more cautious about this market. Volatility did crush here a tad bit. We did see it come down to around that 22, 23-ish area. And you did see some of the IV crush on the wings of these options. So the out-of-the-money calls, out-of-the-money puts, they did not react as well today. That's kind of your first sign. We still have a lack of liquidity in this market. So I think this is just a reprieve for now until we actually further direction from this conference.
Yeah, and that's exactly what is driving this market. I mean, you talk about the optimism. It's cautious optimism, isn't it? As long as we see this boxing match playing out between stocks and oil prices, just talk us through the
Okay, we're going to close right at 6,700. Nice little pop on the futures, back to 6,700.
Divergence taking place within the RSI, making lower highs on the RSI as price continues to move a little bit higher here. And I think this is once again fading the milestone level at around that $100 level. Maybe some conversations between Iran and the U.S. And some back channeling.
All right, it's closing bell. I'm your host, Kozavitin, coming to you from theclosingprint.com. 4 o'clock straight up. Hope you have a great evening. Got a hard stop. I'll send out some updates maybe later this evening, stocks that may follow through tomorrow. Have a great evening, everyone. Take care. We'll see you tomorrow. Ciao.